BlackRock, DTCC, Fidelity. The entire thing was just institutions. It's next level. This industry is going to the next level. And guys, I don't know what else to say. I'm bullish.
You said it. You finally said it.
I'm so bullish.
Andy's bullish. I'm bullish. We're bullish. We're going to the top. We're on 4th floor today. We're going to be on floor 1, and then we're headed straight to the moon, boys.
Intro goes crazy. To the moon, Rob.
Hey, I'm thankful. I'm thankful for the innovation exemption this year.
Dude, to the moon. Did Vanguard just save our bags? Is that what just happened?
I think Paul Atkins hopped on. He's making a whole New York finance tour, and he decided that he's Santa this year.
To the moon. To the moon. Dude, so there's a Doomer news account that is similar to Zoomer. If you guys have seen them, there's like a Doomerfied and a Zoomerfied one. Do not listen to anything that the Doomerfied guy says, because he put out a post today that said that MicroStrategy was officially going to get added to the S&P in January, and I completely bought it and totally BS. So
no,
I kind of got owned there.
Yeah, strategy's not getting added to the S&P with Bitcoin under 100K. That's
not anytime soon.
That's just not. We went through the criteria for them to get added. I do think that if and when they do get added, it is inevitable and they will be added eventually. But and I think it'll be bullish because there's a lot of flows and funds that are just tracking the indice, right?
Yeah.
Just tracking the index, and a bunch of passive money is just buying the S&P without any regard of what's included. They're just trusting Standard and Poor to make their decisions for them. So whenever strategy does get included, that'll be quite bullish. But no, today
was Vanguard. I think you think it's Paul Atkins. I guess it probably was Paul Atkins, but the Vanguard thing probably didn't make much of an actual difference.
Well, the Vanguard thing was rumored yesterday. I doubt there was much flows in the first few hours that it was live.
Yeah,
maybe I'm wrong, but
actually, how do we even look? Maybe Blockworks has that data.
Not sure. Well, it's just the ETF, right? But it's a matter of how much volume they're seeing through Vanguard's ETF. Like Vanguard's a broker. You can buy the ETF through them as a broker.
Yeah.
But this thing was already available. It's just a matter of Vanguard clients being able to buy it.
Yeah. All right, guys, we got our first guest ready to go.
I think this Paul Atkins thing is going to be bullish.
Yeah, let's talk about it. Jamie,
so,
I'm sure he's going to have a take.
Well, I'm sure he will. So we can bring him up here whenever he's ready. But I just watched this segment, and I think I do think that what they're trying to do is push forward as much as they can without Congress, right?
Yeah.
So they're trying to do market structure, they're trying to do genius, they're trying to do clarity, all these things. And what Paul Atkins said this morning, and he's going on all of these things, he's trying to make a big press tour out of it, is that they have enough power just in the SEC to push through some exemption for a lot of companies to go and be more publicly accessible to broader markets.
Yeah.
Could be
Okay, guys, we
ETFs.
got Jamie here up. Hold on. Jamie, are you there? Just
I am here. Yeah. Hopefully you can hear
confirming
me.
you're with us.
Can you hear
Yes,
me?
we can hear you.
All
Okay,
right.
good.
Good.
Beautiful.
Rob, please finish. And Jamie, I'd love to hear your thoughts just to kick off about this Paul Atkins speech today, because I think it did have some immediate market impact, but I think the more longer term impact is probably what actually matters here.
Well, you're gonna have to tell me what it is because I'm in Art Basel, Miami, looking at art at the moment. So wasn't paying attention.
That's
Dude, you're
Digital
not too
art
far
though.
from
It
us,
is
actually.
digital art, so it's relevant.
exactly where you should be, man. Yeah, I was in our Basel last year. Pudgy Penguins threw a nice party. We are from Florida, and
Ah,
Florida is the home of our Basel, so it's a great time. And yeah, this regulatory exemption is what Paul Atkins is talking about today in New York. He's making a bit of a press tour on Nasdaq and on Wall Street. He's saying basically the SEC has the power to open up capital markets to a lot of these offerings from crypto companies,
Yep.
and they're not required to wait on Congress to push forward legislation. They have the power to exempt a lot of companies from the regulatory overhang that had plagued the industry for so long, which ultimately should end up for a free market and should allow a lot of these more innovative crypto companies to flourish in public markets.
yeah. Well, look. I mean, sounds positive, and the reality is that the regulatory environment in the US has just never been more positive, more constructive. And yet we are where we are with the markets, right? And so that's kind of the great paradox at the moment, really. So it's great for innovation, and I think in particular things like DeFi, where founders can be based in the US and not be concerned about ending up in jail, right? And we've had this drag on the industry for over a decade now, really, helping people have this kind of this kind of game of regulatory arbitrage and like having one entity in Singapore and one foot in Dubai and the amount of for a startup, if you think about these things as kind of just early stage startups, like the amount of money that was required to be spent on structuring alone and minimizing the risk of innovation was just ridiculously prohibitive relative to any other industry, any other kind of thing a founder could be doing. So, on the one hand, it's good from a kind of markets perspective, but I think it's also good in bringing more founders into the space, right? It's kind of legitimizing the space, it's giving them more certainty that they can innovate in it, and there's not kind of this risk that half the founders on the planet are just not even going to consider entering the space if they think they're even coming close to breaking the law. So this is good news.
Definitely. Jamie, has your kind of venture arm from Outlier, have you guys had a change in strategy the last 6 months? We've seen this shift towards a lot of these public sales. Now, I think Aztec just went live with their ICO today. We saw Infinex announce their Sonar sale. There's a general shift in direction in terms of airdrops versus ICOs, as well as valuations, as well as business model and focus on customer. And I think there's just a lot of different takes going on right now. And from our perspective, we had done about 2 years of pretty heavy early stage kind of venture funding from our own capital, from like pretty much mid 23 all the way to like about Q1 this year. Since then, we've pretty much said no to about 99.9% of teams, maybe only written like 2 checks in the last 6 months. Our thesis is pretty much just around, okay, guys, we're at a certain point in the market where things have gotten a bit out of hand. People are raising easily. People want to throw money at anything. We're going to take a back seat and kind of watch this unfold, and then kind of invigorate our venture stuff. When the sentiment goes bad again. And frankly, we got there a little bit quicker than we expected, but I think it could get quite a bit worse if we do go lower. But that's when we kind of think the good venture deals will actually appear again. Do you agree? Are we missing something? What's been your strategy this year from the venture perspective with regards to actually allocating to founders?
Yeah, well, I mean, so we've been operating for near 12 years now, and we've constantly had to change our model, right? And it's kind of just inherent to the industry. And so, yes, we've kind of, over probably the same kind of time period that you're talking about, with your change in strategy, we've similarly restructured the organization and kind of realigned it to where we think value is going to accrue. In what are we now? So yeah, beginning of 23. So actually, to step back, like we're an open-ended fund. Effectively, we're actually an LLP, so we don't manage third-party LP money, which gives us huge freedom in what we do, the time horizons that we invest in, change of strategy. We could, in theory, affect overnight if we wanted to. Sadly, it doesn't quite work like that at our scale, but in theory, we can. And generally, our model is that we kind of have this seeding and harvesting, depending upon where we are in the cycle. Traditionally, we've always been very focused at pre-seed seed. We were a studio, then we're an incubator, then we're an accelerator. With the accelerator, we became one of the most active investors by deals done in, I think, 23 and 24, certainly top three. And that was very intentional. We thought that was the time to be deploying at that stage. That gave us a portfolio now of about 400 investments, heavily indexed on seed across pretty much every category, from ZK to DAI, DPIN, even some emerging ones like robotics. And so we kind of feel like we've got most bases covered now for kind of our broad thesis, which is kind of a decade long, and something that we call the post-web. Maybe we'll talk about that a little bit later. So we kind of feel we're indexed, if not over-indexed, on seed. And so with regards to that, we're kind of now just watching how that plays out, how some of those mature, and because that 400 portfolio has different stages now, as a consequence of being around for 12 years, it gives us lots of different kind of data points on the market, what's working, what's not working, both like within categories and more broadly. And from those data points, we then try to, I mean, it's more art than science, is the honest truth, right? But we try to kind of synthesize that and say, okay, if we project forward, what does that mean for the next 6-12 months? Similarly, one of the benefits of having run the accelerator, and in particular in collaboration with a number of different ecosystems, is it also gives us kind of some insights across some of the kind of larger blue chip protocols where adoption is actually happening, how that might be, may or may not be correlated with their kind of performance of their token. And so that all of that to kind of together gave us a pretty stark view of the market, I'd say, coming into this year. And it was really just a case of beginning to transition the organization to move away from acceleration at scale. So we're still running a couple of programs very, very selectively within things like privacy, which we're highly convicted of, and we believe is going to be relevant for this kind of transitionary period. But more generally, in terms of what we're doing with our liquid capital, is putting it to work in liquid markets, in secondary markets, primarily because we need to finance our business, but also because we think that's where the action's going to happen. So that's to kind of just set the scene in terms of kind of how we orient to the market. But effectively, our view, and this has kind of been the house view for the last 12 months, is that we're going through a period of consolidation. Clearly everything that was going on with kind of the meme coins was this kind of last attempt to kind of just recycle gains, because there was no real new capital coming in. And a lot of the attention kind of obviously with ETFs and stuff went into Bitcoin, ETH and Sol. So none of that was kind of cascading down into alts, and it certainly wasn't cascading down into new launches. So within that context, we believe that there'll be consolidation, especially if the only new money that's coming in is going to be institutional, and through institutional products, they're going to be looking for tried and tested networks, tried and tested founders. And actually, one of the ways that we're kind of looking at this now, and I think you can kind of see this with the kind of privacy narrative that's happening, is it's not just kind of capital. Capital follows trust, and ultimately we're in a trust crisis at the moment. When you're in a bull market, trust, signal becomes very diffuse because everybody can be right a little bit. What happens is in a market like this, which is not just, I'd argue, a bear market, but a sustained bear market, that trust collapses. And what begins to happen is that it will kind of reconstitute itself around, I believe, a very small handful of signals, which are people like Vitalik, people arguably like the Winklevoss twins, people who've been across cycles, who largely have their integrity intact and are talking about things that they think are important for the industry, privacy being one, identity. And so the good news is that I think that capital will begin to coalesce around these signals, a very small handful. That will be institutional, for better or for worse. But it will be going into things that I think are important to progress the industry, important to bring new assets, new kinds of economic flows on chain. And so really that's kind of where we're looking to allocate capital. I'll be honest with you right now, I mean, even when I go to get my head shaved at the barber, right? People know I'm in crypto and they say, hey, where should I put my money? I'm like, dude, I have no idea. Right now, it's a complete shit show.
Yeah, I've actually nobody was asking me and things like during Thanksgiving week. I mean, I had a couple people talk to me about it, but nothing like what
Yeah,
it's usually
I
like.
mean, honestly, I think it's being opportune. Like, I don't think the floor's necessarily in yet. We've kind of moved quite a lot of our liquid into stables and stuff like that, and even some cash, and then we're kind of looking to reallocate when there begins to be a bit more of a recovery. But I think it's going to be slow. I think it's going to be gradual. I think it's most likely going to consolidate into, like the top 20, top 50. I don't think that's going to yield, crazy multiples, but I think it should over the course of the year, give decent returns. Ultimately, look, the problem is for our wider portfolio, which is kind of seed, late seed, many of those have put off launching their networks, some for over a year, even before 25. And every quarter they're like, shit, should we do it? Should we not do it? They, of course, have a lot of legacy issues that they need to reconcile on, previous rounds and valuations.
Yeah.
All the kind of traditional launch methods just aren't working. And everyone's jaded. You kind of see a lot of interviews and
Yeah.
dudes just look worn out, washed out.
And everybody wanted Monad to fail. Like everyone wanted Monad to be a scam. It
Yeah,
felt
well,
like.
so I kind of liken it to this grieving process, right? Most people are grieving that they've round tripped it again. They didn't realize the gains that they should. Everyone's feeling a lot poorer. And again, when you see equities performance and tech stock, it's kind of like it's a bit depressing. And so we're in this phase of like anger and blame. So everybody loves sovereignty when they're up, and they don't like responsibility and sovereignty when they're down. So they're looking for people to blame, whether it's Raoul Pal or like Chris Benesky, like whoever it is. It's like I did this because of that person, and now I'm my bags are down. And so people will get over that, and when they do, they're gonna have to then figure out, okay, well, who do I, if they can't form their own opinion on what they want to invest in, well, who do they have conviction in as a signal? And like I said, I think that's gonna be a very small group of people. I think most people, most institutions, and I would even like hold my hands up and say Outlier, right? We've kind of lost a bit of our signal, right? Because for us it was indirectly, product of scale is 400 investments. You're going to have a few blow ups in there, right? Especially in these market environments. And that's nothing we've done. In fact, if anybody's lost, it's like we've often been the biggest bag holder because our tokens vest over several years. But by virtue of our model, like our signal's not as strong as it used to be, and it shouldn't be, right? And we've got to rebuild that trust. So like we've gone through a whole process of just even doing due diligence on our existing portfolio, like phoning them
Yeah.
all up, interrogating the numbers, and actually understanding, historically we just support them and amplify what they're doing because we back them and like we're loyal. But actually, there's going to be it's hard times at the moment. Bad markets lead to bad behaviors. Some people are just locked into a very narrow range of options, and so we're actually even just getting a lot more selective of within our own portfolio those that we will and will not amplify. And so I think there's this whole reset that has to happen. It starts with trust. Capital will then follow.
Yep.
But I'm also like really optimistic. I think like privacy is a great thing. It's great that we're talking about this and not all the other bullshit that people have been wasting time on for the last 2 years. It feels like almost.
Yep.
There's loads of other stuff that's
Did
really
you guys
important
do
too.
Aztec? Are you guys investors
No,
in Aztec? No.
no,
What about Zama? Did you guys do Zama?
no.
Okay, those are both coming out sooner than later.
Yeah, yeah.
Jimmy, if you're somebody who's watching this right now, who's got a basket of venture bags, liquid bags, tons of different altcoins that are obviously still vesting or that they're down bad on, some Bitcoin, some majors. How are you thinking about your allocations going into 2026? How are you thinking about the first and second half of 2026 in general? It seems like sentiment is pretty low. It seems like people have accepted that there's a bear market, that we're either in one now or that it's certainly coming. While at the same time, from a bigger kind of perspective, it's never been better to be in crypto from a regulatory perspective, from a institutional adoption perspective. How do you kind of balance these two viewpoints and perspectives and kind of just phenomenon happening at the same time when it comes to your portfolio going in the end of the year into the end of 2026?
Well, I mean, so to kind of the initial question, which was like if you're retail and you kind of got this exposure to pre-listed and maybe some kind of low liquidity alts, my first advice would be get a job. Like just some steady income for the next year because it's going to be wild, it's going to be bumpy, and you're not going to be getting crazy multiples, right? So just like get something that's going to bring some cash and pay your bills and just kind of get some comfort, because really what you want is optionality, right? And so that's what we've been quite careful to do at Outlier, is to make sure that we have optionality, right? We're operating at a scale that we can afford to run over the next 24 months without being a forced seller. We're actually getting loads of OTC in equity, which is quite interesting. And in particular in regions like LATAM, we ran a couple of programs in LATAM and like bridges. And there's a lot of, again, coming back to this consolidation theme, there's a lot of M&A happening, right? There's very few, there's a very small group of entities that have cash, that are cash rich, they want to put that to work. And there are a load of others that might have launched a token, but have kind of postponed it. They've just focused on, creating revenue and building value in equity business. And most of those are just going to get acquired. And so we've kind of got as people are starting to build positions or negotiate mergers and acquisitions, we're part of those conversations because we often have a kind of a hybrid of equity and token exactly for this reason, because we're not always sure across cycles where value is going to accrue. So we're actively looking at those. We've executed on exiting some of those, divesting from some of those positions. We generally don't follow on in equity, so for us, we're all about the token, and so if we can sell some equity, great, because we just get diluted anyway. And so that's being very very kind to us, and we're being very kind of opportune there. And then more generally, we're kind of sitting it out a little bit. So we're not necessarily doing we'll do some selective deals, but typically kind of later, and where the business has they have a solid business. We're actually seeing a lot of teams that have progress in terms of users, especially in a B2B context, that are revenue generating, sometimes even profitable, at least break even. We're seeing a lot of restructuring going on. So where they might defer a token, they're kind of restructuring things where the token rights are kind of moved within an equity entity, and so they're raising through equity, but that equity carries token rights, and then there's some optionality for the investor as to what they do there. And I actually think, there is something in DATs. I know kind of everyone's shitting on them at the moment, and rightfully so, right? I think a lot of them are probably already in a lot of trouble. Kind of more from naivety than anything else, but it's innovation, right? And a lot of things have got to fail when you're trying to do new things. But I do think there will be a trend towards harmonizing equity and token, and having public entities like an equity startup that actually lists maybe before it launches a token. And then when the markets come back, and they'll have to figure out the relationship between those two things. We actually did a kind of public proposal for Base. Just thinking around this, like if you're Coinbase, how do you reconcile like being a listed company and then having this token out there? Similarly, we're probably going to do one for Brave, because we're an equity investor in Brave, and that their kind of equity business is going really, really well. There's a lot of stuff I can't say about it, but they're very, very well positioned in an agentic sense. Their API is being heavily used by a lot of LLMs at the moment, and so there's a lot of interest in Brave equity. So might they be looking, I don't know, at acquisition? If I were them, I'd be certainly thinking about SPACs. Might do some acquisitions and roll things up, but you're going to have to reconcile token and equity. And so I think these are the big questions. We're going to have to see new models, blueprints for what works. And I think this kind of gradual harmonization is a maturation of the space. As I said, that will lead to more institutional money coming in. I think that's a good thing. I think indices which track categories and perform fundamental analysis, like seeing capital allocated against fundamentals is my dream. Like it's never fucking happened in 12 years. We spent all this time like designing tokens around utility. Nobody gives a shit. They just want to, they just want it to pump. And the less actually I think retail are driving narrative, the better. Retail can of course participate, but if they're following fundamental analysis, I think that's net positive for the space. So directionally, it's all really positive, right? You just got to stay in the game, stay solvent, and do what you got to do to kind of get through this.
And that's where the signal comes from. You've been in this game for 12 years. You mentioned some others, and it's the people that stick around throughout the cycles that continue to coalesce the trust, right? These people that stick around are ultimately trust shelling points, and they end up surviving. People follow along. Jamie, thank you so much for coming on. I think it was an absolute pleasure. You've given us a lot to think about, and I think others that are looking at this market that are kind of judging the sentiment, and they're trying to juxtapose, right, the positive when it comes to the regulation, all the things happening beneath the surface, but this very jaded feeling that they're seeing in the public sphere. I think you really helped provide some through lines and some clarity on the way to think about these things. Thanks so much.
Yeah, thanks for having me. And like what I would say is a kind of a closing thought is, we've been through several of these before,
Yeah.
and they are soul destroying, because nobody on the planet like traded how they should have done, right? Nobody on the planet realized the things that they should have realized. We all round trip stuff. It can be depressing, but every time this happens and there's a kind of a reset, like if I look back at every other low, this is the best low that's ever been in terms of the environment, because other ones were like, a digital asset's going to be a thing. Like there's
Right.
been
There
really
were
existential moments where
existential,
I'm
right?
like, fuck,
Yeah.
maybe we've just wasted 7 years of our life on this thing. And actually, it's just been like a fantasy. For sure, digital assets are here now. I've never been able to say that from a market low like this.
Awesome.
I agree.
Thanks for
Thanks,
your time,
Jeremy.
guys.
Yeah,
Appreciate
thank
you.
you so much. We'll see you
Enjoy
next
Miami,
time.
man.
Yeah, thanks.
Enjoy our Basel.
Yeah, thank you. Bye-bye.
Bye.
Cheers, man.
Our Basel. Great times, great vibes.
Yeah.
Always.
I'm honestly not jealous of missing it at all, but I definitely would be. It would be fun to be there.
The crypto stuff is always a little bit. There's a crypto side of Art Basel, and then there's like enjoying the vibe, seeing some art. Big. You like art? You go to art museums, Andy?
I haven't been to one in a while, honestly. So yeah, have to figure that out. But
Yeah.
like I said, I'm good on Art Basel. I don't think there's anything there for me.
All right, let's hit a quick commercial break, and we'll be right back. We've got an interview that we want to show you guys with Saeed from Wormhole. It was a good time. We recorded it yesterday. We're going to show it to you coming up next.
Yep.
Yeet is built for big moments. The most fun you'll ever have with your crypto. Go to yeet.com to yeet into your next game.
Not your keys, not your coins. From the team that pioneered cold storage, Trezor has just released its new wallet. Guys, if you are still using hot wallets in 2025, 2026, you are missing the entire point. Secure your coins. Get a Trezor at trezor.io.
Go anywhere on chain instantly with Relay.link. Relay is closing in on $10 billion transferred. Go to Relay.link to bridge your assets now.
Money shouldn't wait for Mondays. Following its real upgrade, Polygon is now one of the fastest chains for stablecoin transfers and payments. Visit Polygon Technology to learn more.
Kalshi is the world's largest prediction market. You can trade on anything in all 50 states. Go to kalshi.com to trade today.
Talk to AI like your lawyer or your doctor or your therapist. Yours, private, and here today. Visit near.ai to have a fully private chat experience.
Havachi is fast and private perps trading, secured by ZK with Celestia underneath. Go to hibachi.xyz to start trading today.
Looking for yield that stands out? Infinify gives you just that. Deposit stablecoins and earn far more than the current savings rate. Infinify is a battle-tested, reliable DeFi platform that is ready to go. Head to infinify.xyz.
Halliday is unified crypto payments. Give your users more wherever they are. Go to halliday.xyz to never write a smart contract again. We're here. We've got Saeed, the CEO of Wormhole Labs. Very, very excited for this conversation because there's been a lot happening, not only in the Wormhole ecosystem, but Wormhole connects ecosystems together. We're going to be talking about Monad, Solana, what it means to launch on Solana, and how Wormhole played a pretty significant role in helping that come to life. Saeed, before we get into it, it's your first time on the show. Would love to just get a little bit of an intro into yourself and how you ended up at Wormhole.
Hey guys, nice to be here, and thanks for having me. Yeah, I mean, a little bit of an intro. Been in the space for a long time. Really got into Bitcoin around 2010, 2011, just as a holder, just watching this project post 2008 financial crisis, was like super interested in it. Didn't do much in the space until maybe 2020, when I joined an HFT firm. Started working there on the crypto desk. over at Jump, and then from there started contributing to a lot of projects, and helped out with some of the infrastructure side of the building efforts that were going on in both Solana and Ethereum. And then, Wormhole seemed like a really, really cool idea, because of all of the pain points that we had experienced building other primitives, other dApps, right? And trying to get more utility for the assets that we were using. And so to me, it was very much a no-brainer. We thought the number of blockchains was going to continue to grow, and that this pain point would become more and more acute to the end user, to people like ourselves who are trying to build in the space. And so we started to think of, like, from first principles, like, what can we build and contribute to that will maybe alleviate some of the friction.
Yeah. From our, we've talked a lot about modularity and again, the multi-chain thesis, and the idea that there is more and more blockchains that are coming up. A lot of this TVL is happening on chain, and interop solutions like Wormhole are connecting them, bringing them together. We've talked about the interop landscape quite a bit on the show. We've had Robinson on, we've had Dan from Wormhole on, and you guys are movers and shakers in the interop space, which is a very competitive landscape. But you guys were able to help execute on the Monad launch, and Monad chose to do something particularly unique in launch on Solana. And I think a lot of people were somewhat confused or curious as to why Monad decided to launch their token on Solana, given that Monad has its own blockchain, and the typical playbook is for tokens to launch on centralized exchanges. And so this caught a lot of people off guard. They were curious about it. Why did Monad decide to launch the Monad token on Solana, and how did Wormhole play a role in helping bring that to life?
Absolutely. I can't really speak for Monad, but I'll give you my perspective.
Sure.
For why they would do that. I think it really comes down to the way in which these blockchains are looking to compete, right? So how does Monad actually see competition, and how does it see what are they bringing to the space, and why are they valuable to the space? And I think for them, launching their token only on sexes and their own L1 it's not really the product that they're building, right? The fact that their token is only listed on their blockchain is not a moat. It's not something. It's not really the reason for why they exist. And so what I think kind of drove them, or at least why they engaged positively with the Solana listing or the launch on Solana, was simply because, hey, we want to rethink the playbook of trying to engage with the entire crypto universe, right? Not just centralized users and the nascent community that we're building on Monad, but everyone. And so everyone understands that Solana has one of the best network effects in crypto. And you've heard so much about, trading on Solana and traders and the community and the being number one on DEX volume week over week over week, and so, like, there's a bunch of different ways you could try to tap into them. I think this particular way with Sunrise was very novel, and it was something that allowed for them to say, okay, this is how I'm going to engage with the Solana ecosystem. I'm going to do it in this almost mutually beneficial, value additive way, as opposed to just like deploying a bridge and hoping that you can siphon liquidity and users that way. I think it was a little bit more thought out, and I think Sunrise played a very big role in that. And that's why the launch ultimately was pretty successful.
Yeah. So tell us a little bit more about Sunrise. I think everyone is familiar with the Wormhole portal, using it to go from Ethereum to Solana and back. Obviously expanded in the interop landscape. Obviously the Earn product is now live and doing well. What is Sunrise? How does it complement the rest of the Wormhole product stack?
Yeah, I think Sunrise is kind of marrying three major friction points, specifically focused on day one listings. Like, what are the points of friction to be able to list an asset minute zero, day zero, for everyone to be able to have a good experience with that market. And those three things are really, fast bridging, or the ability to bridge these assets in and out, right? I think that's a critical first step, and that's a major technological piece. I think the second is go to market. How do you actually get everyone within an ecosystem involved in a way that they're aligned to make this launch as successful as possible? And that's very difficult, just because it's very hard to get people to care about stuff, right? You have to be a little bit thoughtful with that. It's something that a lot of teams struggle with. And then the third is obviously liquidity, right? And having a liquidity strategy for an entire ecosystem is kind of like that last third pillar of the strategy. These are the same three problems that centralized exchanges have to solve every time they list an asset, especially if they list a new asset from a new blockchain, right? That they have to newly support. They've got to figure out the tech. They've got to, figure out a strategy when it comes to go to market, and they've got to also figure out what does minute zero look like, and that largely comes into play with the liquidity question.
Yeah, this was a pretty massive campaign. Sunrise DeFi is bringing newly listed assets onto Solana and helping more decentralized launches for these tokens, rather than the typical playbook. You give a significant portion of supply to centralized exchanges. People are tired of that. They don't like it. And I don't think projects like it either. It's the centralized exchange cabal that ends up building this vendor lock-in as a result of the way that they were doing things. And Sunrise DeFi provides an alternative. And so I would anticipate that a lot more projects are going to do this. I'm curious how you guys landed this Monad deal. Like, you guys, like we said earlier, the interop landscape is extremely competitive. We've seen M&A play out. Robinson has been on the show talking about this. When you guys were in discussions and you were talking to Solana and you were talking to Monad, how did you end up talking to the Monad team, and what was their feedback when you initially brought them this idea?
I mean, I think it wasn't as complicated or as in depth as one would assume, given the size of the launch. I think it really it was just really a bunch of people thinking from first principles: what is important to us, and what are the reasons why we are building the things that we are building, right? And so really it came down to, like, are both of these major brands going to engage with each other? And Solana was happy to do it, and I think Monad was happy to do it, mainly from a really good place of, like, hey, can we flip the script on competition, right? Like, everyone believes that you have to be very crab-like in this industry and pull everyone down. Whoever's doing well or whoever's building something similar, you've got to, bring them down, or else your existence is at stake. And I think both of these teams, because they really believe in themselves, and they really understand the value that they're trying to bring into the world, they don't approach it that way. They're totally happy with there being competition. They understand that there will be more competition in the future, and they don't see their success in bringing each other down or invalidating the efforts of the other. They see it as, hey, let's actually compete on execution. We are actually really going after some of the same stuff, and we're going to bring the technology, we're going to bring the community, we're going to bring the strategy. And I think both teams really welcome that, because they have a lot of confidence in themselves, and they're really going after something real versus just going after perception,
Yeah, totally. Because on the face of it, you'd think, oh, both of these chains are fast, performance enabled. They're going to be fierce competitors, because there's a fixed set of users. Some of them are going to go on Solana, and if they're not on Solana, then they're going to go on Monad, and vice versa. But like you're saying, these two are actually complementary. And as Monad is starting to build a base of its own user activity, it can tap into Solana. There's a strong overlap between the users that would enjoy the applications of both of these ecosystems. And it shows. I mean, DeFi Sunrise had, I think it surpassed Hyperliquid, if I'm not mistaken.
Yeah, it did. And within the first 5 or 6 hours. Yeah, and that's a big statement, because as far as trading goes in crypto today, everyone's watching Hyperliquid. even the centralized exchanges are watching Hyperliquid. And so for that to happen, I think was a really, really big milestone. It was one of the KPIs that we wanted to hit, but we were uncertain whether that was going to be possible or not.
Yeah. So what were some of the other KPIs? Like generally, I think this was a resounding success. How do you think, other projects in the ecosystem are going to look at this? What value is this going to provide them over and beyond centralized exchanges? If you're speaking to the plethora of projects that are out there that are still yet to launch a token, they know they're going to launch a token and they're looking at their go-to-market playbook and they're kind of weighing the options, right? Centralized or decentralized listing process. What would be your message to those founders?
I would like really understand why you are pursuing a centralized exchange listing, because if you really kind of go through that and you understand why, you understand it kind of boils down to a couple of things. I'm going there because it will be able to provide the best trading experience to the most users. That is the reason why you want to list on an exchange. That's why you're willing to pay, and any, the high prices, go through the process, do all the things that you need to do. There's a lot of hoops that you have to jump into, both with the exchange and within yourself, that you have to like kind of change to get that across the line. And so if your North Star is, I want users and I want a great trading experience for those users for my asset, Sunrise is showing you that you can do that on chain. Like that's the big thing. And like I think if you put it as simply as that, is like a lot of people doubt the Solana ecosystem. They doubt the network effects that have taken place there. They doubt the initiatives and the efforts there. But as someone who has worked on many L1s, L2s, been a part of many of their day one launches, you can certainly tell the special ones from kind of the forks and the more of the same, right? And Solana and several others, but Solana really takes the cake in terms of like being able to build a culture and a network that is extremely valuable to any team that's building in crypto. And so you should have a strategy for being able to at least speak to that economy.
Yeah. And so the thought process as it goes is, like we talk a lot about how TradFi and DeFi are no longer separate. Wall Street, on-chain finance, these things are just becoming one. It's just finance, no longer TradFi and DeFi. And similarly, I hear you making a parallel here, which is centralized exchanges and decentralized exchanges. These are essentially blurring, you could say Hyperliquid is decentralized, but it's kind of only a 3 out of 4 multi-sig, based on the validator set. And you could kind of see Coinbase going in the direction of like, yeah, it's a centralized exchange, but they're going deeper and deeper into the direction of listing all of the assets that are available on chain, and pushing people to base. And so the lines between centralized exchange, decentralized, these are getting blurry. Mm-hmm. And these are effectively becoming exchanges. And what I heard you say is like, look, the reason you launch on an exchange, putting aside whether it's centralized or decentralized, you launch on an exchange to get distribution. You launch on an exchange to give the widest net of people access to your token and the best trading experience possible. And so more of that is happening on chain. I'm curious, how do you think this is going to play out, as the centralized exchange cabal starts to get broken up? For a long time, we were talking about how decentralized exchange volume was coming for centralized exchanges. This was going to flip, and now it feels like it's happening. Do you see it similarly from your perspective?
Absolutely. I think, there's still this big moment that people in this industry are waiting for, which is like when price discovery for any particular asset is on chain, right? And that's something that's been spoken about for such a long time. And the limitations to that have largely been technical. They've been economical. They've been, some of the other stuff that we've talked about today, liquidity, things like that, right? But that is a worthwhile future to pursue, right? Because that ultimately validates the entire effort of building, programmable finance like that's decentralized, right? Is that when actually the majority of what is happening in a specific market is happening on chain versus on centralized or permissioned servers. So that line is being blurred, and everyone is approaching it, in their own strategic way, right? Like everyone has different position, right? Coinbase and Binance's position is very different. You can see their models are very similar, right? Both have their own L1s or L2s. They have their own chain. They have their own decentralized apps. They have their own wallets. They're able to list the meme coins. They're able to list these assets that maybe would not be good fits for Binance proper. Then you've got the Hyperliquid of the world, right? You've got many of those, but you could just point at Hyperliquid and what is their strategy? Their strategy is, okay, we are 100% focused on the on-chain trading experience, and we are going to progressively raise the bar of what that looks like, so that even if the sexes come into this space, we're going to be ahead of them, right? And then you've got Solana, right? You've got Solana, you've got Monad, you've got some of these other very high performance, low cost, giving the builders the kind of throughput that they need to be able to build parallel, on par or better experiences than their centralized counterparties in TradFi, not just in sexes, but in TradFi in general, right? And they're pursuing their own strategy with that, right? So I think this is kind of that moment. It's one of many moments to come, but it is a moment of like, hey, it's very clear how these lines are blurring. It's very clear that no one's stepping off the gas when it comes to, bringing some sort of convergence. But really, what it's going to end up looking like is all of the assets that you can trade on TradFi, you can trade on DeFi, all of those, and then at some point you cross some tipping point where you start to see price discovery on chain. So now it's like that's akin to like being added to the S&P 500. Now everyone has to trade on chain because that's where the source of truth comes first, right? And we haven't had that yet, but people are building toward it.
The writing's on the wall, and you can see how those network effects would compound. As Solana has one of the most distribution, and we could expect that price discovery on chain would happen on Solana first. Monad, again, lots, great brand identity, great brand associations, great partners, plenty of apps. We'll see how it pans out. What has been your take on the Monad launch so far?
I think it's been phenomenal and I'm trying to, I'll say that very objectively, right? I've been a part of so many L1, L2 day one launches, right? And I can say, I know there's a lot of like controversy right now about Monad and its launch and things that Arthur Hayes has said, and there's a big discussion happening on CT about it. But I think largely that discussion has been like two different worldviews that they're not really arguing the same points. So you have, on one side, you have like, a short-term view, right? Objectively a short-term view. And then on the other side, you have a long-term view. It's very hard for you to have like a genuine conversation because they're not really arguing the same things, right? Yeah. Like Arthur, by his own account, has not really, looked at the tech or doesn't care about the tech, hasn't looked at the code, doesn't care about the novel innovations that Monad has done. On the other side, you have the long-term view, which is like, hey, yeah, you can certainly be a trader of Bitcoin or Ethereum or Solana, the entire 5-10 year history of those things, and you could have that type of analysis, or you could kind of look at what we're building, right? You could look at the technology, look at the community, look at the different things that we're doing, and you could say, hey, maybe this is a better version of the EVM, right? And what does that mean? What does that mean to me? Just like if you were to talk to someone who bought Bitcoin in 2010, it's like, I'm not actually looking at, all of these short-term things, right? I'm not making an argument about the Japanese yen being, right, hiking up interest rates and then saying that's why Monad is going to zero, right? Those are just very different outlooks, very different types of analysis. I'm just saying, hey, I believe in decentralized money, right? Yeah. I believe in sovereign money. And I think this is the first time in history that something out there is actually giving people the ability to do that, right? And so I think that debate is largely like not a real debate. It's more just two different ways of looking at stuff that you really can't argue. One side can always be right. The other side can also always be right, because they're just arguing different things. But I would say that their launch has been amazing because of all the launches that I've seen in the past. I've never seen an ecosystem launched with 70 apps. I've never seen those apps raise over $150 million to try out all these economic experiments on the chain. And this is all day one, right? Like, this thing has been alive for 7 days, maybe 8 days, not even 7 days. You know, I've never seen all of those components, but I've also never seen so much innovation happen on the EVM side, right? Everyone likes to compare like Solana or Monad or any of these other chains as like, oh yeah, they're trying to be an Ethereum killer. I mean, sure, you could take that viewpoint, but really what they're doing is that, you know, Ethereum is the kind of Ethereum killer, right? Like, you have someone who's pushed the EVM faster than Ethereum has, right? If you go and trade on Monad or you trade on Solana, it doesn't take, it takes 10 seconds to understand why this is a better experience, right? Monad has been able to do that with some pretty amazing engineering work. If, you know, they're not sacrificing some of the things that other L2s have sacrificed, right? They're almost calling out, in my opinion, you know, I won't speak for the team, but in my opinion, like, they're almost calling out this whole like L2 strategy, the idea of having centralized sequencers, Ethereum going down a roadmap that essentially makes it free to leverage their settlement layer, right? Like, they're not getting paid for any of that. So it's very hard for anyone to kind of look at what Monad's been able to do over the last 3 years, see the improvements on the tech that, you know, you would want to see in the EVM, make it completely EVM compatible, and then launch with such a strong go-to-market and such a strong ecosystem in such a short amount of time. You know, for me, it's like one of the best launches I've seen, one of the best executions of a team I've seen ever.
Yeah. I tend to agree. I think Arthur and Keone are arguing two different things. They're not arguing that they're not debating on a similar playing field. One of them is talking about the token, the other one's talking about the tech. One of them is talking short-term time frame, the other one's looking at a long-term time horizon. I do think it's still very early, even though they've been building for so long, and they've obviously made improvements in the tech. I think it still remains to be seen. Because they took so long to build, it hasn't been live for very long. And so we're going to see how this plays out over the coming months to years, because ultimately these technological improvements, you know, whether censorship resistance wins or if it's performance that maintains the moat, we're going to see which one of these matters more when the rubber really meets the road. Saeed, last thing I got for you, I want to hear about the Wormhole roadmap. We talked a lot about Wormhole, talked about Solana and ETH, which is great commentary on the market as a whole. But what is going on in the Wormhole ecosystem? What can our community look forward to in Wormhole?
I think Wormhole's been incubating a lot of really interesting ideas, Sunrise being one of them. There's a massive effort, at least on our side, to really focus on what comes after bridging, right? What are the applications? What are the things that actually push the space forward? Unlocking day zero listings was one of them for this team. And I think us being able to incubate Sunrise really pushed that out into the world in a way that had a major impact and has got a lot of people, you know, rethinking what that looks like and what one of the most important things that happens in this industry, how to actually pursue that in a new way. I think we've got a lot of those things that we've got lined up for 26, which is really, you know, a lot of the tech has been built. The friction points still remain to be able to provide the end user result or outcomes that you want for the end user, right? And so when we talk about like the sex versus dex wall fading, right? It's happening across the board, right? All of this stuff is being abstracted, right? And that's why I always say like execution will win. Execution on the team, right? Like if the team can execute, but also like execution will win, because in a world where nobody really cares what blockchain you're using or what consensus model you're using, what they care about is, can you deliver the experience with the proper parameters that the market wants? And that's really what the Wormhole Labs team is focused on.
Incredible. Saeed, CEO of Wormhole Labs, thank you so much for coming on. Absolute great work helping the Monad launch with Sunrise, and hope you guys have a great end of the year.
Thanks, man. Appreciate
Talk
it.
to you soon.
Bye.
Cheers. Yeet is built for big moments. The most fun you'll ever have with your crypto. Go to yeet.com to yeet into your next game.
Not your keys, not your coins. From the team that pioneered cold storage, Trezor has just released its new wallet. Guys, if you are still using hot wallets in 2025, 2026, you are missing the entire point. Secure your coins. Get a Trezor at trezor.io.
Go anywhere on-chain instantly with Relay.link. Relay is closing in on $10 billion transferred. Go to Relay.link to bridge your assets now.
Money shouldn't wait for Mondays. Following its real upgrade, Polygon is now one of the fastest chains for stablecoin transfers and payments. Visit Polygon Tech. Yo,
Here we
Spencer's
are.
coming up.
Oh yeah, Bird is a
I had to
word.
take a little sec off or a little break off for that segment, but I'm back. Bird
Yeah.
is the word.
I hope you guys enjoyed that chat. Saeed and Wormhole are doing cool things. They were pretty instrumental in bringing Monad's token to Solana, and obviously that was a huge campaign. And people kind of caught people by surprise. They were like, "Wait, Monad is a chain. Why wouldn't they just launch on their own chain?" But they're trying to break up the centralized exchange cabal. The entire idea is that there's more distribution happening on chain, and decentralized exchanges are continuing to eat into centralized exchange market share. And you can get a lot of distribution and a great UX and give people access through decentralized exchanges. But let's bring up Spencer. I'm actually curious because Spencer's had a lot of experience building IP, developing not only Moonbirds, but been instrumental in some other brands in the Web3 world as well. And, before we get into Moonbirds and IP and all these things, I'm actually curious, but welcome to the show, Spencer. I'm curious what you think about Monad's launch, given that this was so hyped. They had so much community force behind them. They did what seemed to be a really good job building the brand before launching the chain. Just curious how you think the launch ultimately went.
I mean, I think it went good, but good in a certain way, right? Which is they did the thing, right? Like in crypto, there's this vision of okay, you launch at a couple billion FDV, this is good. A lot of people eat if you launch at a couple billion. If you sustain a couple billion, this is even better, right? There's a very explicit thing that happens. I think most interesting part was the lack of Binance in their launch, and I think it's a quite a successful non-Binance listed launch, right? You see most successful listings go through Binance. It's been less and less so recently. I think largely due to the perceived sell pressure from Alpha, but it was a very, very successful, we're not using Binance and it's going to be okay launch so far, at least. I also think they did a very good job of being top of mind at a time when there wasn't as much going on. One of the things I think is a hallmark of this cycle is there are fewer very interesting projects, I think, in crypto that seem to have delusional founders building towards something really exciting. I think as a result of this, you saw a lot of there was a very meaningful talent drain to AI this cycle, which I don't think we talk enough about. And there was fewer new entrants. And so you saw a lot more sort of derived games. I think you see, Monad is probably this to some degree, but a lot of different flavors of some L1 with progressively lower floats that has some sort of chart that looks a little too good to be true is kind of the flavor of this cycle. And so I think there was a little bit more of genuineness to how Monad launched, where there really was campaigns. You had to live under a rock to not know about Monad launch. The last couple of days, they did the cards. I think the Monad cards was a very successful marketing campaign, etc. And I think they're reaping the rewards of that. Also, they launched at a time when a lot of people wouldn't launch, and I think it was just quiet. And so we're still talking about Monad days later. Had Monad launched, December of last year, we would have moved on in 48 hours, right?
Yeah.
I think where I want to see the future for Monad is how many Monad dApps can you name right now? how many things on Monad? Andy or Robbie, can you guys? Like
I mean, like I can, yeah, nah, not really.
but also like I don't know. Does this matter? Right? Like XRP, like how many like ecosystem projects can you name in XRP? Like, and that's huge, right? So it may not matter, right? Maybe that's not the thing that actually matters for success of an L1 in 2025, and which is a crazy thing to say, but going into 2026, it may not be the thing that matters, right? Memetic, like as a matter of fact, I would go so far as to say like Uber driver shilling coin is more important than like number of ecosystem projects by like a lot, right?
Yeah, I mean, at least in today's age.
Yeah.
Ripple substantiates that claim.
Exactly.
Ripple is the ultimate Uber driver shill coin.
Great. I will tell you, every founder of every coin wishes they were the ultimate Uber driver shell coin.
Yeah.
Like that is the like pinnacle of achievement for a coin.
You're right. And that's kind of the great at becoming ubiquitous. And I think, you know, you've been involved with Pudgy Penguins. They have certainly reached some sort of exit velocity outside of crypto. In which case, you know, in which they've been able to basically get their visuals and their imagery in Giphy. And you have people that are spreading the good word without people even realizing it. Similarly, you've got Burb on your jacket. I'd love to hear more. You know, Burb is the word. And you know, you've essentially taken Moonbirds and now are looking at scaling it to also reach exit velocity and become ubiquitous outside of crypto. Maybe you could just tell us a little bit about how that's going.
Yeah, I mean, ask a small question, right? There's a lot of different things that are going on here. I think like, you know, let's take maybe a step back to dive into this topic. So I think the context is important, right? Which is tech adoption in crypto. Like the marginal tech seems to have really plateaued. I think what that means is the meaningful next steps is all about consumer adoption, is about reach, is about, you know, we talk about why is Monad good? Because it had reach. Like that's why it's good. Why is XRP good? Because it has reach, right? So like, but one of the things that drives reach is intellectual property. I think this is a thing we see historically, right? Like when you think about, you know, I think, for example, like large anime titles reach more audience than the names of major corporations, right? This is kind of a weird and interesting thing to think about, but it's very much the case. And when you think about maybe traditional media, like I think a lot about is superheroes. So basically all superhero, like when was the last time you heard of a new superhero, right? Probably never.
Yeah.
Because almost all superheroes, basically all superheroes, come from 1940s and 1950s, which is the golden age of comic books, which is when all this IP developed and they created this crazy moat that has outlasted most people who were alive in the 1950s and 1940s, right? Which is a kind of crazy staying power. Now, I think if you look at where the society is going, our IPs coming from all IPs should not come from comic books, right? Like clearly we're in a digitally native age. We should have digitally native IP, right? Even more, take that a step forward. We are here because we believe in the future of crypto and the growth of crypto. Like we should have crypto native IPs. But my view is that golden age of comic books actually already happened in crypto. That was 21 to 22 bull cycle for NFTs. That is the golden age of IP that comes from crypto. And I think you've seen this, right? Like Pudgy Penguins comes from that era. Azuki comes from that era. Bored Apes comes from that era, right? Like Moonbirds and Burb IP comes from that era, right? And so when you look at who has really successfully done something, I think Pudgy is, you know, the best case so far. I think what they really won was being the face of crypto. I think if you look in the 21-22 cycle, like Bored Apes was so big. Bored Apes was bigger than basically anything has been since then in crypto of a new launch, right? Like people forget this. Like if you talk to random people on the street, they have some vague knowledge of these monkey pictures that were expensive on the internet at one point. Even if they don't really, I mean, I've talked to people who don't know what Ethereum is, but know what the JPEGs of monkeys are, right? Like that was a level that Pudgy has reached a big level of success. I don't know that it's as ubiquitous as Bored Ape was at its peak. Pudgy has done a much better job of like maintaining stable and growth around their ubiquity. But like this is sort of the golden age. And what was really cool about us acquiring Moonbirds was like, it was like the only one of these IPs that hadn't yet done a token. And this was like, I looked at this like, oh my God, like this is the opportunity to own a golden age of crypto IP. Now, I say golden age because, you know, look, NFTs today are not what they once were, right? In 21, 22, the NFTs were a much bigger thing. Volumes, floor prices, everything supports that argument. But that doesn't mean that like what NFTs are is useless, or what even the brand is useless. So, right? The brand can express itself in so many different ways, in the same that like comic books today are not what they were in the 1940s and 1950s, right? Comic book collecting has gone basically a straight line down. The grails still go for a lot of money and all these kind of things, but like the medium with which we consume Superman has changed over the years, but Superman is still Superman. And this is kind of a thing that I think about, right? With what is the medium by which we consume the IP that exists in the space? I think, there's a couple of trends that are really important right now. AI is absolutely, like, if you think about intellectual property changes fundamentally with AI. Like, how do you grow it? What can you do? The videos that you can put out, the ways that you can bring it to life, the way that your community can bring it to life. When we first acquired Moonbirds, we, did a lot of AI image generation I was doing of my Moonbird, and I helped other community members do it of their Moonbirds. And that was our first marketing push, was take over the timeline. We're going to be the first brand, to really lean into AI generated content. And a lot of people didn't like it. There were people who said, oh, this is just AI slop. There's a lot of art collectors from the original Proof Collective. They're like, this is not art. And a lot of people kind of left, and that was okay, because I said, look, like, they're going to attrition at some point if you have that view, because we're going to lean into this, because this is the thing that you have to do, right? If you own an IP in 2025 into 2026, like, you should leverage AI in a very meaningful way. And even if it's not quite as good today, like, it's clearly going to be better very soon, right? Better than all other options. And so, like, being at the forefront of that adoption is not risky to me. We've even seen like activations that we've done with like Story Protocol and Ablo with AI games, and Remix with AI games, and Ablo with the AI merch. Like, it's not only our own ability to create better products, images, story, like marketing support. It's also like the community's ability to create stuff, which I think is really a cool moment to live in. That being said, though, like, we always lead with our own flagship products. Because, like, fundamentally, and this is a difference between Orange Cap Games, our company which owns Moonbirds, and say Pudgy, is like, we are fundamentally like a design and manufacturing company. Like, we made the Pudgy Penguins trading card game Vibes. We design, distribute, manufacture that. We've just started to tease the details around the product that we sold. So I think it was like a couple weeks ago. We said $25, Moonbirds, physical collectible, buy as many as you want, 24 hours. And we sold $1.7 million of them.
So 68,067 units.
Yeah. So like, that was a huge moment in like the growth of this IP for a lot of reasons that may be obvious, but a lot of reasons that might not be obvious. So the obvious reason is like, there was $1.7 million wanting to buy physical collectibles of this IP. Like, that is obviously very good for the IP. Maybe not as obvious is how many doors that has opened in distribution in the traditional space, right? So that is a very meaningful launch for a toy product, period, right? Not just in the context of crypto. It's the largest RWA sale ever on Solana, primary sale, but it's also like a really meaningful sale in the context of like what that product is. And I almost just accidentally leaked it. But it's
okay, cool.
Yeah. Sorry, I'm ranting.
No, so it's a big launch. It's still kind of a mystery box. Expected delivery sometime before the end of the year, maybe Q1, early Q1. It'd be like one of the larger distributions of the Burb IP. You also mentioned, so that's like one medium. You also mentioned the work that you had done with Ablo and Verse 8, basically using AI to create custom Moonbirds and almost allow people to create their own fantasy of their ideal character, and basically like create a new culture. So that's also like in the digital form. Then you've got the actual NFT that people can buy, hold, use as their PFP. And then they've got like social media, Twitter, Instagram, YouTube's, etc. So you've got like all these like living forms and digital forms of IP. And so I guess maybe just helping you put that together of like what that entire picture looks like now going into 2026. Obviously you've brought this brand to new heights now, really from our perspective. How do you round that thing out into next year, or what verticals do you want to expand on that you see a lot of potential with? What verticals do you think maybe don't need as much love? How do you think about kind of holistically the different form factors of this IP?
Yeah. So I think like where we've done a really good job is like being a cultural thing in crypto, right? Like that is, you meet a lot of people who know about it. Burb is a thing, right? Is the simplest way of putting that, where like we've done a lot of, soulbound token activations, et cetera. I think obviously like the really big upcoming thing for us is Burb token launch really, radically changes what the Burb IP is in a lot of ways in its relationship to crypto. I think it's a almost linear improvement, right? Like whereas the NFT market has been really shaky in terms of volumes and prices and all, like the rest of crypto, like, has been high volatility, yes, for sure, but there's been a lot of like bigger outcomes there. And so I think moving into that arena is really exciting for us. Also, there's just like a lot more people that own coins than own NFTs, right? A, NFTs on a per unit basis are just generally expensive, but B, like a lot of people just trade on exchanges, right? Like Korea is probably the most relevant country, certainly the most relevant country to retail trading volume in crypto. And early on in Korea, like there was a big wallet exploit. So basically everyone uses centralized exchanges there. Like, the centralized exchanges, some of them have NFT marketplaces that generally do basically zero volume, right? But like the pool of people that can participate on chain with your IP is really expanded. And this is something that we have been really intentional about. So we've been doing these soulbound token activations, right? I think it's 184,000 wallets, unique wallets, have a Moonbirds soulbound token now in their wallet. This was very important to us because of this thing that I said, which is like, there's just not that many people that trade NFTs, right? And so like, I think prior to us doing the activation, it was like somewhere in like 5,000 to 10,000 people had a Moonbird like or related NFT in their wallet. We have 20x that number of that have something with a Moonbird on it in their wallet, right? Like that is very meaningful to me. They've interacted with us on chain in some capacity. But really like the view is we have to break out of crypto, right? We have to go be something in the mainstream. I think this is non-negotiable to me, right? I think really what crypto is all about net inflows of capital. Where do they come from? For a period of time, like in the 2021 cycle, like, this was people coming on to centralized exchanges, net new participants. The exchanges were marketing a lot, that there was user growth. They would go and sign up for exchanges. I don't think we see that this cycle, right? The exchanges aren't really growing in their user base. As a matter of fact, they're having this war with decentralized exchanges, but like there isn't net, it's the same people moving around these venues. If you really like look at it, right? It's the same liquidity that's PvP and it's marginally more sophisticated every time, right? Like the average tenure of someone in crypto who's in crypto today is much higher than it was last cycle because many of them just stuck around. And we haven't gained as many new people. Really where the new capital comes in is, from public markets this cycle. I think the ETFs really did bring people in. The DATs, good or bad, did also bring people in. Like, there's a lot of that kind of thing. So I think a lot about where that happens. But there's a story and it's really meaningful to me, which was when we first did Vibes, which was the Pudgy Penguins trading card game. I had a friend of mine who I knew from trading cards, and I had come to him and said, hey, you should play the game. And I said, no, it's crypto, therefore it's a scam. And I said, no, please sit down and play the game, then you can decide, right? And he took it cards. We played a game and he loved it, and he was like, actually, this is a really good game. I still don't like crypto, but this is a really good game, right? Then he starts playing it online, right? And he does quite well. And at the end of the first season, the rewards are paid out in Pengu. So he has to go make a wallet, connect it, get the Pengu rewards, right? Checked his wallet. He's now using the money in that wallet to trade meme coins. And so like, this is someone who went from it is crypto, therefore it is a scam, to trading meme coins. And how does that progression happen? I'm going to make the argument that holding something physical in your hands, right, really gets you over like a problem to a lot of adoption. We've everyone who's the easy low-hanging fruit to adopt crypto has already adopted crypto. We have to go after the hard things, and it requires some sort of persistence, right? And I think one of the hardest things for people about crypto who aren't already here is like it's too conceptual, right? It's like, I don't understand what this is. What is a cryptocurrency? What is a meme coin? What is a Bitcoin? I don't know. And this is where IP is so strong, because IP is something you can put in their hand. You can't really put a Bitcoin in their hand, right? But you can definitely put a Burb in someone's hand. You can definitely put a penguin in someone's hand, right? Like, and having that physical, tactile experience, ideally that draws you into the digital world, but gets you over that objection of like, this is too conceptual, right? And that's where like, even if that happens one person at a time, that's where that diehard fan, like if you are the onboarding for that person into this world and they enjoy this world, which many people do, crypto's a lot of fun. Like, I think this is a thing that people don't realize is like we have a lot of fun here relative to a lot of other places of the internet. A lot of the other places of the internet are a lot more salty and ornery and all sorts of things. Like this is kind of like, I mean, there's good and bads to crypto, right? But like like it is actually a fun environment. I think people just are a little bit afraid to experience it. So if you can be that bridge and they come and they find that joy, then you have them as a collector, as a consumer, as a participant for life.
I mean, I totally agree. I think that the best thing that these brands that has broken out of the space have done is one, they've brought it outside of all things finance and brought it into more culture and to like day-to-day culture of different people. Like if you look at some of the Instagram accounts of some of these big kind of IP and NFT brands, they're completely removed from like finance and speculation, just much more like relatable to the normal folk. And then bringing that even further into the physical, whether it be in stores or in malls or in toy form for kids. It's just, and then using that to bridge the gap. I think like the term is like phygital, like fi digital. It's kind of like what they call that merge. Now Spencer, this may be silly, kind of based on what you've just spoken about, but people are wondering right now as they're listening to this, like, NFTs have been on a hell of a market run. I mean, they have had,
I agree.
like altcoins of the most part, they're not much far away from where the entire altcoin market is. And so, you look at Blur right now, and I mean, it's pretty sad. It's like top volume for the 24 hours is 170 ETH on Pudgy's. Next, you've got Nakamigos, Moonbirds. But like, man, back in the day, it would be top volume 5,000 ETH easily. And some of these collections, right? And I think punks have just gone under the price of one Bitcoin for the first time in a while. I just generally think people want to know, like, is this category of the crypto economy over? Like, are NFTs just completely dead? Is there something that's going to bring them back? Like, is there an investment thesis for like the NFT category at large right now? And the reason why I preface this as being a silly question is because, well, you bought Moonbird, so clearly you see there is. So maybe like, what is that for people who are either holding, wondering if it's a good time to buy, trying to figure out which collections will survive? Just like generally speaking, how are you looking at the market right now for NFTs from an investor point of view?
Yeah, I mean, there's a bunch of things, right? So like, I think that NFTs, when they had royalties, meant that their companies could exist without business models. And almost none companies adapted to business models. Like, it's not a coincidence that like the companies that are doing relatively well, right? So I would say like Pudgy and ourselves, right? Like, are companies that were acquired kind of like either towards the tail end or after royalties was a thing. And then like we have from day one been revenue driven, right? And like, guess what? Making money keeps the lights on. And we're getting to a point where like a lot of big companies that had millions of dollars but never focus on revenue, like it's kind of hard to once you've had this magical money flow that you lose, like it's kind of hard to then figure out revenue, right? And if you're a company that's spending money and not making money, like that is not a recipe to stay open. And so like that's a really tough pill to swallow. And the NFT market has done really poorly this cycle. There's a lot of variables there. I love NFTs and something that I'm sad, something I'd love to see come back. But I think you'd also look at this and say like, for us, at least in the position that we're in, like the end game is not like NFT is an important part of the journey, right? And is an important part of this, but the end game is not like if NFTs die, Moonbirds isn't dead. I think that's really important, right? Like NFTs in many ways, if you look at the most successful outcomes, like the most successful outcome of Pudgy Penguins NFT is Pengu the token. Like that is the most successful part of that. And if you think of Pudgy Penguins NFT as a building stone to get you to Pengu token, then they were an incredibly successful building stone, right? Like regardless of how they're doing now. I think there's some aspects of how the relationship of a token and NFT work post the launch of the token that maybe could be improved on. And there's some stuff that we're working on around that, which, we're not ready to share yet, but like I think that there's some deep thinking and experimentation that should be done. But like, look, when you look at what Pudgy Penguins is, it's lots of, like a lot of success comes in token. When you look at what Bored Apes were and are, like ApeCoin was a huge part of that story, right? And so, where we say, hey, NFTs, the venues they're traded on, their liquidity, like it's not what it was. I totally agree, right? I think it's really tough in a lot of cases to buy NFTs, especially if when they launched their token, they made mistakes about launching their token, right? Like that's a really hard thing to come back from, no matter how good the art of the NFT is, for example. I think we see this, especially in the art world for NFTs. Like why are art NFTs struggling? Probably a lot more. I mean, you used to see art blocks towards the top of those lists. Like you don't really anymore, right? Why are art NFTs, except for Skulls of Lucci, basically the only one, but like why are the rest really struggling? Is like because they didn't have this relationship to a token. The token market isn't as bad as the NFT market. Like it is in a better place, and so those with tokens, like they just work better, right? I think that's part of it. But I think it's also like, you know, going back to this parable from earlier in our call, like if you look at like, okay, comic books, right? Comic books are basically dead. But you're not going to look at me and say the Superman IP is dead, right? You're not going to look at me and say any of those comic book IP, like Superman is not dead. Comic books might be dead, but Superman exists in other forms and expresses itself in other forms. And that's where like thinking about the company as an IP focused company, right? First is, I think, the key, because as long as the IP survives and is valuable to stakeholders, and as long as you bring your stakeholders along in the journey in the way they should be brought along, then like you win together by staying on top of the meta. You don't win together by trying to bring back like this is a big question for us, right? Is like, do we try and be the brand that brings back NFTs? Like it's a thing that I think Pudgy did briefly. It's a thing that like, but this is a very tough challenge, right? Or do we want to be the brand that like wins the coin market, right? And find a way to have that like create, you know, benefit stakeholders across the spectrum of stakeholdership in our organization, right? And like to me, it's obviously the latter, right? Like we have this great opportunity to win a really big versions market. I think there's actually not that many interesting companies that are launching fungible tokens, right? I think obviously Monad was one of them, but they're very orthogonal to what we do when it comes to actual brands with real products, real revenue. You know, we've done millions of dollars of revenue in the last 12 months on Burb IP, on our Vibes TCG that we produce. Like we're a very real company. And this is where I'm kind of excited about the market being a little bit softer. And this is like a weird thing to say, but it's like, you don't see who's swimming naked till the tide goes out. And like, as someone who's very clothed, like, you know, that doesn't hurt us. I mean, it might hurt the industry. Like in the past, like when FTX collapsed, I think I talked a lot about this. It was like, holy shoot, like the industry might be over. Like I remember thinking like this, like we might just, like I might need to go do something else. Like crypto might be over. I mean, like my trade was just super long because it's not over. Everything was way too cheap, but like there's a feeling of it might be over. I will tell you nothing that is happening right now feels like the industry is over. Nothing is even close to that. Not even remotely close. It's not even remotely close to even Silicon Valley Bank. Like nothing is like, oh, prices are down. Sailors selling Bitcoin. If you believe in crypto, sailors selling Bitcoin cannot end crypto. If you believe in the inexorable nature of the industry that we're in, none of these things matter. There's no existential risk today to crypto, and certainly nothing like it was back then. Bybit got hacked for $2 billion. Never once felt like an existential risk, right? Not even a little bit. Like we are sufficiently like CZ went to jail, not existential. Like
yeah, exactly. We're beyond the point of industry collapse. So to your point, it's like it's just about outlasting people at this point and building with a longer term horizon and doing it.
Well, it's not only it's outlast and build smart and build for a future that you believe will come, and then be the best positioned when that future comes. You know, like a thing that I think a lot about. This is we were investors in Bullish's IPO, right? Like, why did Bullish IPO before Kraken? Before
yeah,
Gemini,
it's crazy actually.
Right?
I was shocked.
Why? But I'll tell you why. It's because that team was led by private equity folk, and their entire history of existence had been preparing for an IPO. And then and you couldn't IPO for most of the time they existed. It was impossible. There's no way. Crypto product, not a chance. Circle IPO happens. It's the best IPO in like forever. Banks are like, what's the next crypto company ready to IPO? And every other crypto company is scrambling to get ready to IPO. And Bullish walks in the door and says, here's my financials.
Yeah.
And now you have Paul Atkins on CNBC this morning saying, make IPOs great again.
Yeah.
My pogo.
And so like the goal is be bullish, right? The goal is be the best positioned for the thing that you think will happen. They said, we think that IPOs will be great for crypto, and we want to be the most well-positioned for an IPO.
So do you think there's a chance that Pudgy Penguins or Moonbirds or some NFT brand of the like will IPO next year?
Next year, probably not. I don't I think next public market cycle, definitely. Yeah. That's like the bet that I'm trying to make is like, and I think that like no one's ever IPO'd with a fungible token except for Circle, but that's USDC, so it doesn't count. But like no one has launched a fungible token also IPO'd. To me, that is the golden goose. Like that is the thing that you have to do. Now, no company right now in crypto that makes money off anything other than trading volumes has enough revenue to actually IPO, right? Like So the goal is in the next however many years it takes to get there, like you have to be doing enough revenue to go public. And that probably means acquiring companies. That probably means, growing your business lines very substantially. It means a lot of different things, but like, this is where I'm excited because my vision is like collectibles world is like, you can do those type of things. Right. Yeah. And so, we're probably on the track to do something like $6 million in revenue this year. Our goal probably for next year is something like 20, but I want to get to like 200, 300. Like I want to get to $1 billion a year in revenue. That seems like a crazy number, but like, I think you can get there making collectibles, manufacturing, distributing, designing. Like that's really what we're trying to do. And I think if you do that, you have the opportunity to go public in a future cycle. And if you go public in a future cycle with a fungible token, like this has to be good for both, right? This is like I could be wrong about this thesis, but this is my very strong believed thesis. The beauty is that pursuing that route, because it is a revenue-based route, like you inherently also, unless you make big mistakes with how you acquire that revenue, like should have enough operating capital to keep the lights on and survive, right? Like the thing that is de-risked this cycle is like the banks made way too much money off crypto IPOs, right? Next time the market is hot, the first thing you're gonna look at is crypto IPOs, right? And this is the beauty of how financial incentives work is like the Circle IPO is great, the bullish IPO is insane, right? Like the bullish IPO was nuts.
Yep, it was.
These are the two of the best IPOs shocked. Like ever, right? Both crypto, both this cycle.
Yeah.
You better believe next cycle, like you better believe that the bankers are really planning for that next cycle to be the ones that capture that alpha because it's the best alpha into a future cycle. Like this is where the beauty of the marriage between TradFi and crypto really comes into play. And like you have to be the type of company that type of person understands and wants to court. And this is why revenue has started to matter more because they judge those companies based on revenue, right? Crypto folks have historically not, but now that the marginal bid is TradFi, like TradFi definitely cares about this. And so that's where like, it's really a mentality shift that you have to get into.
It's happening at every part of the TradFi stack. BlackRock's made the most money off of crypto ETFs. So it's not just IPOs.
Yeah.
ETFs as well. It's happening at every part of the stack. Yeah.
Super bullish. Spencer, are you going to Art Basel?
I think I'm gonna run down to Art Basel. I will be going to Abu Dhabi as well for Breakpoint. So
okay, busy man.
I just look, I don't love running around, but whatever is the most important for the burbs, this is what we got to do. And so it's not about where do I want to be; it's about where do I need to be.
Well, thanks for coming on, man. And good luck in the next month. I know it's a huge month and then into January for next year for you. So not necessarily jealous of your travel and work schedule, but I know you're going to crush it. So thanks for joining us.
Well, thanks so much for having me on. And I hope you guys have a great one.
You too, man.
Cheers, man.
Thank you. Go Burbs.
Peace.
Burbs the word.
Yeah.
See you, man. Up next, we've got our friends from Alpen. We've got Samantha, one of the co-founders of Alpen. They heard some news on the overheard token rumor mill from DevConnect about some mainnet plans. Ooh. So there's a lot to talk about. Privacy's back. Bitcoin yields are on. Rob's having his rec drink. So let's get Samantha up and let's get to it. Let's talk all things ZK, Bitcoin, and the new financial layer. Should be a good one.
Yeah. Let's bring him up. I'm ready for a technical talk here. We've been deep in the financial vibes here. I'm ready
deep in the financial vibes, huh? It's probably because the market's bouncing and we had a VC and we had Spencer and
exactly. Every green day we talk finance. Every red day we talk tech.
All right, guys, we're gonna get Samantha up now. BTC clocking in 91.9. ETH clocking in.
There's Samantha.
30-20.
Samantha, welcome to the show. We've had a couple guys from your team on. David, way back when. Some great discussions on OP-Cat and all of the things. David was a great guest on our Bitcoin and Beyond show, and so Alpen is a friend of the show. It's your first time on, man.
It is, yeah.
Yeah, welcome.
Thanks, guys. Thanks, Robbie, Andy. It's great to be on here. Yeah, let's talk tech. I was actually hoping to talk more finance too, but maybe we can do both.
We can. It's a green day. Let's talk finance as well. What's what's the latest on the new financial stack out of Alpen?
Yeah, we're focused around Bitcoin. Everything Bitcoin. Alpen exists as a way to make Bitcoin more useful, and we think that the huge greenfield opportunity right here in unlocking BTC collateral here with all of the actually interesting things, innovations that have been made over the last decade in on-chain verifiable finance. We should not have that all be gate kept and go through single wrapped BTC asset. That's not what's going to drive industry adoption. So, the latest is we have some very amazing partners coming on, launching native live on Alpen. We're currently on testnet. We'll go live with them as day one mainnet launch partners. TBD on date. It'll be some point next year, first half of next year. Let's say that. We haven't released any more from there, but we expect to hyper focus around some of the DeFi opportunities within Bitcoin. So thinking about building Bitcoin credit markets. How do we get why should the biggest exchange BTC stable swaps exist even on Ethereum or Base? They should exist on Bitcoin, on Alpen, a Bitcoin rollup. And so we've been really hyper focused towards those applications and very excited to kind of announce more on that.
Very cool. Very cool. I think people are very excited. We've seen a lot more rollups go towards this strategy of trying to bring Bitcoin onto their stack and use it in what they're calling Bitcoin DeFi. I'm of the position where I think most of this is going to happen at an institutional level. Crypto Twitter, for the most part, does not own very much Bitcoin. It's not really a retail asset anymore. It's mostly a whale and institutional asset. But I do think with regulatory clarity, we're starting to see strategy, talk today about, starting to engage in more Bitcoin lending. I tend to think, maybe you have more clarity on this. I think most of this is happening off chain right now. And it's going to be a lift to try to get these companies to use their Bitcoin on chain. What's the latest? You guys are talking, I'd imagine, to miners, whales, and institutions that are holding the majority of Bitcoin. What is the latest from those conversations?
Yeah, I think on lending specifically, I think there's a structural misprice of CeFi lending. I mean, you have not even the institutional and whales, but even retail is paying 12-15% to borrow against Bitcoin. We see that is significantly better on chain with solutions like Aave Morpho. I mean, Morpho is growing super fast. Last I checked, they had more wrapped BTC as collateral than even ETH, and they're primarily on Ethereum and Base. I think that's an incredible opportunity. What's interesting about that and worth pointing out is you mentioned more institutional holders and interest, but in reality, there's on the lending side application, there are a lot of Bitcoin retail holders that want to access real world capital liquidity against their Bitcoin holdings without selling it. There's even applications like EtherFi that exist on Ethereum and others. I think they're seeing a ton of demand coming from the Bitcoin retail holders saying, hey, yeah, I would like to get a line of credit against my Bitcoin to go buy coffee or buy, or do mortgage or what else. And so there's a lot of interest to tap into there. But I think that what's an interesting, to me on this side is if we can build this, trust minimized BTC, which is, our bread and butter, this is what we've been focused on. This is what we're launching on mainnet with things like Clock and Garbled Locks, bringing ZK verification to Bitcoin. This is not just a trust minimized, version of wrapped BTC that's, possible on the EVM, but a credibly neutral one. And if you look at how different fintechs, crypto companies, and even banks are adopting, an example to point to. I mean, I mentioned Morpho. Look at Coinbase; they offer Bitcoin-backed loans. This is kind of this mullet play. They have users, they have distribution, and they're tapping into on-chain vaults. Just much better pricing, structurally much more efficient, much better rates to borrow against Bitcoin. Will other distribution players tap into CBBTC? We think not. We think that the trust minimized aspect of BTC is not just about, better custody, et cetera, but it's also a neutral standard that the rest of the industry can get behind. So if you have other partners that want to tap into Bitcoin financial services, they would want a neutral BTC standard for that. And I think that's going to be a huge driver for use cases that actually exist. All these kinds of like lending applications, swaps, better payment flows, et cetera. So we're excited about that. On the whale side, yeah, I mean, I think you're right. There's a lot of movement towards ETFs and getting Bitcoin financial services through those ETFs and through kind of private banking. But our thesis is that we should be able to outcompete even there. And just with on-chain verifiable finance, like we're seeing kind of where things are headed with moving from variable interest on lending side, for example, towards a fixed rate. This is something that's like we're just getting there, and I think that's going to be really competitive with what's available off-chain.
Very cool.
So I'm just curious, if I'm a Bitcoin whale, the things that matter to me are probably like not wanting to pay taxes on like transferring of different like wrapped versions, or like I don't want to have sat on my Bitcoin stash for like 5 years, 8 years, and then just because I want to do some product, some yield or some borrowing against it, I have to pay a tax on that. It makes no sense. It's like I'm still just using my Bitcoin. So that's one thing. Second is I don't want to have to risk any sort of like smart contract risk, wrapped risk. Like I want the native version of this asset, which probably goes hand in hand with number one. And then in addition to that, I probably just want to borrow against it because I just don't want to pay. I want to be able to realize my profits effectively without paying the tax on it for having to sell. So a lot of it comes down to like risk and tax. How does Alpen create a product or an environment that allows products that enable this feature set to actually happen on chain on Alpen? Like, is this the big priority for you guys? Am I on the right train of thought here? Like, what am I missing from kind of like what
absolutely.
your customers want?
I think that's definitely one of our flagship products here is how do we bring the very best of on-chain lending and pair that with the very best of accessing BTC in this trust minimized way, which is what we've been doing. We made this intentional choice of when we go live on the ecosystem, we're EVM compatible. That's helped a ton in terms of really great teams immediately kind of being compatible already, realizing that BTC as a collateral is a really large kind of segment to go after. And I think for us, a lot of that focus is also on, can we get some of the top stable coins here natively? Can we get some of the best on-chain, off-chain rails integrated, and all the way to kind of like the playbook that we typically see with new L1s and even L2s is like it feels much more horizontal of like let's go after every application, have forks, have bunch of like hundreds of applications and max out some of these KPIs. I think we have a very different go-to-market kind of approach here. We see that there's there are very clear handful of applications, like less than 10, probably closer to 5. And we want to go super vertical and make sure all the way to the UX, like this is our full focus. So like building super deep liquid markets is very important to us. Getting the most competitive rates here, getting the integrations that are necessary so that it's just a native solution, and that's kind of where our focus is around. I mean, you mentioned lending. That's absolutely a flagship application that will be available, and Alpen provides the infrastructure for teams to bring and write Solidity code and access basically all the tooling around the EVM, but do so with BTC that's actually maximally trust minimized in that environment, and then work with a bunch of different there's so many tiers to this ecosystem building, but another part of our focus is distribution partners. We think distribution is everything here, where, what are the channels for users to actually like meeting the users where they are. They may be on a non-custodial wallet, or they may be on like some custodial exchange service, etc. And so we've been spending a lot of time with these different partners of, they want to access Bitcoin financial services like lending, like, being able to kind of initiate a card against Bitcoin or against stables that people have. And so having those funnels to actually drive in activity is so much more sustainable, we think, long-term for the ecosystem than, kind of bringing in billions and billions in a pre-deposit box and kind of, hoping for the best, basically, from there.
Yeah, and speaking of some of those partners, this has become more and more crucial to the overall strategy of rollups, is bringing Bitcoin into a place where it can be serviced by DeFi. Starknet is one of those chains. You guys have partnered with Starknet. Curious about this partnership, because on the face of it, it's like, okay, we've got two rollups. Aren't you guys competing for liquidity? But I think to your point about distribution channels and making Bitcoin programmable and a productive asset in terms of collateral, there's a lot more going on here than meets the eye. So could you tell us a little bit more about this partnership and generally how you guys are working together?
Absolutely, yeah. So first of all, like the Starknet team, Starkware, these guys are awesome. We've been, since the start of Alpen, we've been in touch with various people on the team there. Very technical, obviously, on the ZK side, and a lot of respect for the team. So it's a team that we wanted to work with for a while. The way that we are kind of approaching this partnership, and the way that even like Alpen roll-up infrastructure has been designed from the get-go, has been like, keeping in mind, like, basically we have several years of lessons to learn from the Ethereum rollup roadmap. So what's like working, what's not working there. And one of the immediate things for us was like, there's so much fragmentation here. All these rollups are siloed. And, this seeps up all the way to the user experience, which is something that we really wanted to avoid of, there's so many different ETHs and so many different, basically across all these siloed rollups. And so we've designed our roll-up infrastructure in a way where, we decouple like what's called the orchestration layer from the execution layer. So you can imagine basically multiple execution layers, of which Alpen will be one of the EVM compatible execution layers, can kind of plug into this shared orchestration layer that finally settles on Bitcoin. And the advantage that's afforded from something like that is interoperability across these different execution layers, and also like a standardization of a BTC, like an open standard BTC asset, where different distribution channels, different kind of wallets can support this and immediately sort of get this support across different execution layers. And that's really important to us, to be able to get that experience right and not have it be fully fragmented. So doing interoperability using Bitcoin base layer is much trickier to do, right? And so the where this partnership then comes in with Starkware or Starknet specifically is like, they're obviously leaning into Bitcoin quite a lot. They have a very strong kind of Bitcoin strategy there, and they wanted to get access to the most pristine, trust minimized BTC possible on Starknet. And so we worked with them for a bit and kind of went through our approach with this orchestration layer, and wanting this orchestration layer and this bridge to be maximally like not rent controlled at all. It should be an extension of Bitcoin Core, not something, you're not building on top of Alpen, you're building on Bitcoin. Mm-hmm. And so we plan to basically have this be maintained within like a consortium, which Alpen is part of, Starknet is part of, and a few other teams will be joining as well. And everyone kind of has their own ecosystem that they can connect. And so Starknet will be one of the, it's a founding kind of one of the execution domains that plugs into this shared bridge and settlement infrastructure that we have, alongside Alpen's EVM, alongside a few teams that we have not named yet, we'll be announcing soon. And really, it's the framework of how do we think about this as the neutral BTC asset that's trust minimized that that can win over like a single centralized wrapper, and that's in that direction. It is like, sure, we are competitive in that there are different execution layers. We think Cairo offers something different than kind of the EVM compatible version that we have. But ultimately, we all sort of benefit because we're driving liquidity and Lindy into this BTC standard.
Yeah. And ultimately, building this consortium out is going to build a tighter connectivity between the Ethereum ecosystem and the Bitcoin ecosystem. And like you mentioned, Morpho, Aave, these are some of the DeFi unicorns that have been built and are servicing and are some of the most resilient and Lindy applications in DeFi. And it just makes sense that we bring more pristine collateral into those ecosystems, like you mentioned. And this partnership with Starknet helps.
I feel like we're just like taking a shot at ETH this whole time. It's like, more pristine collateral.
The application layer. I mean, look, I'm gonna stand on business.
I'm not
say
mad
that
about it.
Bitcoin is better collateral than ETH. I don't know. Maybe that's a controversial opinion.
I don't think so. I think it's probably pretty.
I don't think so. I think the numbers speak for themselves there. Yeah.
Samantha, I got one last question for you, which is that Saylor's talking about selling, but he's also talking about lending. He's got a lot of Bitcoin. I think he should be involved in Bitcoin DeFi. If you were stuck in an elevator with Mr. Saylor, what would be your elevator pitch to bring MicroStrategy's Bitcoin onto Alpen?
Yeah, that's a funny question. I have actually chatted with Mike.
Yeah, how did that go?
And he's great. He's actually an MIT alumni too. So he had like this. We have this like brass rat ring. So I also was MIT alumni, so we connected over that. But this was actually quite early, right before it was like late 20 or early 2023 or something like this. So it was a cool moment because MicroStrategy obviously executed their plan in full force since then. I think to your question though, on the pitch, I think right now we are looking into ways of we're making Bitcoin more productive, as adding privacy, adding programmability, all of these things ultimately expand utility of Bitcoin, make it a more productive asset. And with that also, there are different opportunities for yield, in-kind yield with Bitcoin as well. This is an open, everyone we talk to is very interested in this. How do you get risk-adjusted BTC, in-kind BTC yield? We have some solutions cooking around that. Obviously, I think this is not going to be, this will take time. I don't think this will be like a day one. We have like the ultimate kind of Bitcoin yield solution, but there are opportunities to be able to provide yield. I would actually pitch it more towards insuring BTC. I think there's one very clear application that we have. We're really excited about figuring out a way to insure the first, some large amount of BTC that's actually bridged in. And there's an opportunity to LP into, basically provide BTC and get in-kind yield. We would pay the premium as part of our go-to-market spend. It's something that other ecosystems haven't done before, but we think it'd be really interesting to build up Lindy and, offer this at different application like wallet neobank kind of level of, users care about, are my funds safe here early on in a new ecosystem protocol. It's not something that everyone gets comfortable with. I think the term bridge is itself horrible brand, and so we have like some interesting ideas there in terms of how do we think about ensuring value, both BTC bridged in, but other assets coming into the ecosystem. I would talk to Saylor about ways that we can make some of the Bitcoin that he has, potentially USD reserves, more productive through this kind of insuring solution that we're coming up with here.
Do you actually think that, if in the event the strategy would want to do some sort of lending, would they actually want to do? they actually want to do it on chain. I just see them I just see them going, nope, I'm going to go find a centralized lender. I'm going to do it off chain, and I'm just going to do it in my way because this is like the safer way. Like, what would be your message to like how do you think that they should be approaching this? Like, is it a split? Is it because you also
Sure.
just can't put all your, or let's say you want to allocate 20% of the Bitcoin that they hold to lending. You can't just also put all of that into a single lender or a single platform, because that would be silly too. How do you think that they might go about that? And like, do you think that they would want to put any of it on chain?
So this is like if they want to borrow against the Bitcoin.
Right, exactly.
So they want to get dollars against the Bitcoin. Yeah. So I would basically say, like, look, they're first, like, our system has this one of n assumption on trust and liveness. So we have a bunch of entities lined up there. Some of the most well-known custodians, et cetera, are going to be part of this set. And so every single one of them has to get compromised for the deposit there to be compromised. Even if you're not comfortable with it and you want to bring in size, we would talk about having you come on as one of the N entities in this signing set. So like basically at that point, as long as you're trusting yourself, even if everyone else tries to, steal or, whatever, run the deposits, it's effectively a no additional counterparty risk solution if you're in that set. And so there's been some interest from like a family office, wanting to be part of that for this kind of reason. So there are kind of there's much more flexibility when it comes to the kind of counterparty risk that you take on. Now, I think where he may, I think you're right to say, like, yeah, like I still like, would he be comfortable even with that counterparty risk? What about like the unfamiliarity with smart contracts, et cetera? Well, what's interesting is that, like, on lending, like, the protocols we were talking about, like Morpho and Nave, these guys have, tens of billions of dollars in aggregate, like already secured, and they've been around for a while. And Morpho in particular, I think it's not like the entire, Morpho market, like this is, as far as I understand, under 1,000 lines of code and formally verified, right? And so there's a lot of lending security that already comes with some of the smart contracts that will be available on Alpen. And so getting, I think, some of those guys comfortable is going to be pretty big. It's going to be hard, but like we're seeing some interest coming in for sure from DATs along these same lines. So
DATs want to,
I think,
like, participate on chain.
Yeah, I think the other part that most people don't talk about here is like in some ways it's not even going and convincing DATs. It's convincing, like, where are they custodying the Bitcoin? Can that platform basically offer like a 2-click solution that's using Alpen and kind of lending vaults, et cetera, underneath to be able to service those loans? If you build a super easy, integrate basically a super easy solution onto those, like as an example, maybe Anchorage, which I know custodies a lot of Bitcoin, especially amongst DATs and so on. This makes it makes it much easier to convince some of these more institutional players to actually go use it. They don't have to worry about navigating, doing an atomic swap in and blah, blah, blah. Like, that's abstracted away. They trust the custodian. Custodian's part of this, one event set, and boom, they can access loans directly there. And so it's a lot more about closing the distribution channels. And like, in that example, it's like, well, would Anchorage use, Morpho on base and take their users?
No. They want to use it on Alpen.
Yeah, exactly. And that's where the trust minimization is actually very relevant in that kind of context.
Simonta, man, I appreciate you joining us. Great first time on the show. I know it's gonna be a busy couple months ahead for you guys. So looking forward to tracking that. And I know you guys have some alpha that I may or may not have overheard at our event in Buenos Aires that we'll keep under wraps for now, but the audience is ready to hear it maybe next time. So see you soon, man, and thanks for joining us.
Awesome. Appreciate it, guys. Enjoyed the time.
Thank you, man. See you next time.
Alrighty, we got Sal ready to come on up. Let's get Sal up. Sal is the CEO of Sovereign. We're talking about DATs. This guy started a near DAT I think he's bullish on privacy. I think he's bullish on Zcash, Intense, revenues. We got a lot going on here, guys. So let's bring him up and let's get fired up. Last one of the day. What is Near doing these days?
Oh, I'll tell you what Near is doing, because they just sent out a newsletter blast, and we've got fresh data. While we get Saul up, let's bring him up so that we can hear his take on
Near's
everything.
up 11% today.
Yeah.
Sitting in
Near
here at
Intense.
about 1.8. Sal, what's up, man? How are you?
What's going
Hey,
on,
good to
Andy?
see
How
you,
are you?
Sal.
Not too shabby. Yesterday, the world was ending. Today, the future is bright. Not
We're
sure how
back,
this
yeah.
industry survives. Not sure how we survive this industry, but Sal, it's your first time on the show, man. So we'd love a quick brief about yourself. And I know Rob's got some data and some points and some thoughts, and he's fired up. So let's just get right into it with how you got started here with Sovereign or SVRN, and kind of a bit about your backstory, man.
Yeah, happy to do that. And Andy and Rob, thanks for having me on. I've followed you guys for a while and appreciate what you built here. So on the personal side, I've been in the industry my whole adult life. Started off on the institutional side at State Street, focused on emerging technology risks, specifically machine learning and blockchain. Then went over to KPMG, built their advisory business in the US, focused on public blockchains with the thesis to institutionalize crypto as an asset class. We were about, 7-8 years early on that endeavor, but we're on the front row seat of Coinbase building the retail exchange, Coinbase custody being launched, Prime, and worked on a number of awesome projects, got to collaborate with Facebook in the attempts to build a stablecoin network. Obviously did not work out well from a regulatory perspective, but had a great experience as the industry matured into the chapter that we now call institutional adoption. Went to the venture buy side in 2021, have been on the buy side running venture funds for the past 5 years, both of which were very close to the Near ecosystem, investors in Near protocol at layer 1, and then across the ecosystem in a number of projects. And then over the summer, as kind of the DAT 1.0 era was starting to slow down, there was a discussion that we had out east and then subsequently at Salt in Wyoming with a number of the execs on the Near Foundation side. And they were thinking deeply around what does this evolve into in its next iteration and form once we get past kind of the first wave of speculation and hype. And that became super interesting to me to think about, not only kind of this capital markets flywheel, acquire a bunch of the tokens, but actually build a legitimate business that empowers the network and brings it to the mainstream. So that's kind of what brought me here. Super excited for the build. We're about 60 days in post announcement of the pipe, made a ton of progress across a number of fronts. Look forward to double clicking with you guys here.
Yeah, man. I mean, dude, Rob, I know you got some stats and stuff. Just looking at the charts today, like, for example, Kyle Samani launched his Forward Industries DAT. I remember I was in Hawaii when he was raising for it. So that was in August. And then he launched it in September. I think he basically was that last pump, that last kind of shoulder up to 230, 240. Sol's at 140 today. It was just at 125. I think we're probably at a local bottom here for the whole market. We'll see how we span out. I know this because I was talking to Rob yesterday as if the whole world was burning down. I was also slightly hungover, but like, for example, so Kyle is now down. I mean, let's call it 45% ish on like $1 billion of Solana. What's happening here to these DATs? Because I think a lot of people are now kind of taking the piss out of them a bit. How do you think about this first iteration? And like, are you glad that you kind of were a little bit late to the party, or do you not view it like that? Like, how do you think about this first iteration being like, I guess, complete in some capacity and now also underwater?
Yeah. I mean, so also in regards to Forward Industries, like, let's be fair in that it's unlikely they deployed the full capital raise in the pipe in the time window that would lead to them being down 45% today. But where we launched it in terms of the time window, I actually feel quite fortunate. We've kind of been at the very, very tail end of this wave one speculative phenomena and are now in the period of time where public market investors are looking through to understand actual business strategy, the sophistication of the asset management approach, not just at spot, but also in options markets where we're actively engaged. And then really looking towards like, how do you build a network aligned business that gets monetized in the native network token but ultimately is constructive to driving applications to scale on that network. The other piece of this that I think is quite interesting is like everyone looks at BMNR as kind of the flagship example of how to hit the capital markets flywheel. And I think they've done a wonderful job at that. Tom Lee's a great spokesperson for Ethereum, but the whole industry, more than a decade now. But the piece that people don't often focus on is like their timing was incredible. They were catching Ethereum in their initial wave post-pipe when Ethereum was trading 1,400 to 2,000. And so there's this element of timing on execution that leads to you either having the wind behind you as a tailwind or wind in your face. And being at the very tail end when we were in peak negative sentiment on DATs with token prices kind of already suppressed in bear market territory is ultimately going to be a buoy for us moving forwards because our accumulation of NEAR is sub $2 on an average cost basis. So I think when we reprice spot, and NEAR will probably outperform and have strong beta versus ETH and Bitcoin in this next leg and wave, we're going to be kind of lifting accordingly.
We had Lane from the foundation come on during Dev Connect, and the stat that I had that Andy mentioned was, look, this thing is so hot that the stat was NEAR Intense crossed 6 billion volumes. Last 10, it feels like now at this point we're probably past 10 billion just in the last few minutes, but that's the pace at which NEAR Intense is skyrocketing because volume is happening, and Zcash had such a bid. Now that's cooling off a little bit, but what Lane was telling was that this is where we can start to see some potential, whether it's buyback and burn or buyback. He was more on the governance side and thinking more about what a value accrual mechanism could look like. I also see you guys have about 4.2% of the total NEAR supply. Like you said, your cost basis is NEAR under $2, your average entry, and your accumulation target is 10%. I think now it seems like because of what we're hearing from Lane and because of the success of NEAR Intense, it makes perfect sense to accumulate now because there could be potential value accrual mechanisms back to the token. But I want to hear from you what the target 10%. Why are you guys targeting 10%? This is obviously a very significant portion of the supply. You guys would become major stakeholders, which you already are in the NEAR network. Why 10%? Was it just kind of a number, a big enough number where you guys had enough skin in the game? We've seen other DATs toss around 5% total network. Why 10% as the accumulation target?
Yeah, I mean, the thought process behind 10% was really derived from like the spirit of this entire industry in the context of decentralization, where if you're traversing past 10% up to 15% or greater, you start to challenge like what are the actual forces in this ecosystem. And so our job is to be prudent stewards, obviously, of our equity being SVRN, but also the ecosystem at large. And so 10% felt like an appropriate threshold that was feasible based on the scale of the capital raised in the pipe, the forward yield strategies that we're running, as well as future capital formation through our ATM product, which is live. And then ultimately an asset base through which we can fund the CapEx side, leveraging yield off the balance sheet for the infrastructure build, powering both the MPC nodes for NEAR Intense, but also what you'll hear more about tomorrow publicly on the confidential compute / AI side.
Beautiful.
Very cool.
Sal, did you okay, so we had this whole proof of stake is a meme thing happen at Permissionless in June with Haseeb and Tarun and a couple other people. We had a couple like viral clips happen, and people were talking about how you're paying all this inflationary yield, and then the token's going down, and then you're paying taxes on the income, and then you're not even outweighing the performance. And so like, why are we even doing this? It got even all the way to the point where like Celestia put out their roadmap and was like, we're just going to take this all the way down to 0.25% and do proof of governance as our future model, as like our North Star. NEAR recently successfully cut inflation by 50%, if I'm not mistaken. How much does that matter to you from a perspective of investing, from the thesis of the token? Like, just generally speaking, inflation can be seen as an expense on the protocol level when you look at like the balance sheet of, revenues versus expenditures. What does this 50% cut in inflation mean to Sovereign's kind of thesis, to your personal view? Talk to us about kind of like how you think about this.
Yeah, I thought it was a huge milestone and likely the first of multiple that relate to network economic changes and shifting the emissions rate and ultimately budget of the protocol towards useful work. And so the first iteration of that was having the emissions rate natively from the protocol. The future considerations around that will think about how we incentivize, MPC signing nodes powering near intents, but more importantly, the decentralized confidential compute stack that will power near AI. I think you guys probably saw the announcement with Brave recently, where Brave's browser agent is leveraging near AI built on top of NVIDIA confidential compute. But ultimately, the shift is not towards like, how do we incentivize the governance, but more, how do we drive incentives around useful work in the context of the network, and really working towards this future of agentic commerce, where we have agents we can control, we can own, we verify, that can transact in the real world on our behalf. I'm laughing to myself. Like, I remember the clips from you guys at Permissionless on the proof of stake discussion. And the reality is, like, in 2017, 18, as these protocols were being designed in the context of the shift to proof of stake, like, no one knew what the appropriate security budget was at that time. And so I think we're mature enough now as an ecosystem with protocols like Near having, as of September, 50 plus million monthly active users transacting, that we can really think about what is the optimal spend of the budget construction for a protocol like Near.
Yeah, yeah, go ahead, Ron.
Yeah, we have a lot of conversations with a lot of different DATs, right? And most of them are like, we are going to stake and that's it, right? Like, and yeah, the staking inflation is an expense on the network's balance sheet, but it's an income on, a DAT's balance sheet that is staking the asset. And so one of the things that I noticed in the thread that you guys put out when you kind of updated the community on, where you guys were at, how much Near you've accumulated, and what some of the goals were, was that you don't have any intention of being a passive company here. Like, passive would mean staking and being kind of hands off, but you specifically say that you guys are intending on being the engine. The engine for our mission is to make individuals the true owners of the AI economy. And I'm just curious if you could elaborate on that as you guys have started to accumulate more and more Near. Obviously, this is very aligned with the Near mission of private and sovereign AI. How are you going to help accelerate this mission and bring this about?
Yeah, there's kind of two pieces of the word active that are relevant to how we're thinking about this. The second of which is very much in the spirit of what you're just describing here. And so in terms of active to enable this future of user-owned private AI, it's really around how do we power and deliver the infrastructure and be the first to market beyond Near Foundation to support the underlying components that are required to power use cases like this Brave private chat that went live, I think, last week. So on our side, we're in active build mode right now, and delivering this infrastructure should have some live by year end 25, and then we'll be scaling through Q1 of 26 and Q2 of 26, and then also syndicating that infrastructure footprint across other providers who are interested in delivering confidential compute to apps running on Near. But the word active for us is not just in terms of actually building a business and focusing on how do we scale the Near network. It's also thinking about how do we actually manage the balance sheet, and thinking about not just these basic spot mechanics of staking, liquid staking, liquidity provisioning, all of which are largely table stakes, but also looking deeply at the options market and being sophisticated in our approach there to enhance the yield profile, asset accumulation, and also to generate cash, which for us is supporting a buyback program that we announced on Monday of this week, where we're not selling assets off the balance sheet to buy back equity. We're generating cash by productive utilization of our balance sheet in the context of option strategies that will support share buybacks in the event we trade to a discount at some point in the future.
What does that look like? Is it selling puts, and is the options market for Near and some of these coins, is it robust enough to support options and derivatives at this scale?
Yeah, this was something I was talking about a couple of weeks ago down at the Bridge, the TIES conference in New York. But the option markets today for alts, Near in particular, are wildly different than they were 24 months ago. Nice. You're seeing market makers across pretty much every jurisdiction quote Near options, both puts, call strategies, and in some cases, relatively exotic structures that facilitate accumulation under certain conditions. And so we're participating across the full spectrum of different option strategies. We're fortunate to have a former options trader, market maker from JP Morgan as part of our team running that internally. which really helps to manage also kind of the shareholder alignment and the expense ratio of running the asset management function in-house.
Interesting. Yeah, the on-chain options market hasn't really kind of panned out, but Deribit has, and a couple of these others, and now I assume, Vanguard's came into the market. We saw the ETFs launched today. I think Chainlink had an ETF, several others. One can only imagine that Near will be up, relatively soon as well. And hopefully that leads to more demand just generally for these other assets. I think people are kind of wondering when it comes to these strategies, we did see a couple of Ethereum DATs have to sell their ETH to buy back underlying. You're saying that you guys aren't going to do that. You guys will have a different strategy. Push comes to shove. Hopefully that remains the case. But I think people are really trying to understand, okay, this is year 1 or 6 months in. What is the 5-year plan of a DAT, or of these traditional, of your company? Where are you guys? If I asked you, it's Tuesday, December 2nd, 2029. Where are you guys? What is the vision for this? Is it just because once you get to that 10% mark, then what? How do you start to accumulate other assets? I think a lot of people are thinking about these companies in this year, and then it's going to be like they're going to be gone next year, they're not going to exist or something. It's weird. A lot of people are really short term thinking towards this. What is the multi-year plan for you guys? Or maybe if you don't want to speak specifically on that, just generally how you see the landscape evolving over the next 4 to 5 years.
Yeah, the part of the reason that we were relatively late to this kind of V1 window was because we were pitching a V2 story, which is part of the reason I got excited and actually put my hand up to come do this. And then candidly, my incoming COO, who's been with us now for 6 weeks, Dave Schwed, left Robinhood, where he was their chief information security officer, not because we're building a DAT. We're actually not. We're building a treasury company that powers an infrastructure business that unlocks and enables confidential compute on Near protocol. And so that journey to build a scale infrastructure business is a multi-year journey, and one that will be on this entire time. The shift in terms of where we put our yield that's generated off the balance sheet will definitely skew towards CapEx, and then ultimately also proper financing approaches around that infrastructure over time. But in the early days, we're really just trying to get to market and get live to help power and scale the resource stack behind a couple other pilots that are going live, and then ultimately production scale use cases in the next 6 months.
So it's thinking about these things as acquisition vehicles of different assets to power the infrastructure, rather than just these financial engineering machines kind of.
Yeah. And I would imagine beyond what we're doing specifically, you will see these vehicles end up becoming acquirers of underlying infrastructure businesses specifically focused on a network. You may see future vehicles in this space look at multi-asset basket-based approaches. So I think, DATs are not going anywhere. Treasury companies aren't going anywhere. It's the first time there's been this kind of speculative hype around a wave in crypto that actually embodies what it takes to grow up as an industry. Introduce public company rigor around financial controls, quarterly filings, financial statement audits, investor, all these different components. And I think it's what the industry needs. So,
we agree.
I was watching this Paul Atkins segment on CNBC, and he the thing that got the headline was this innovation exemption, and I think the market got excited about it. He says it's coming out in a month or so, and that is certainly going to open up some more financial access for things. But another part that piqued my interest was this idea about corporate governance. And I think for a long time, these crypto companies, not necessarily the companies themselves, but the networks were caught between a rock and a hard place, because we tried to be decentralized and we tried this DAO thing, but we realized that it really wasn't effective at getting things done. And what we really needed, and the EFs sort of recognized this on the Ethereum world, was wait, we actually need to run this like a company and have some goals and go and work towards those goals. And so I think maybe what we're seeing on the DAT space is we're seeing accumulation of the assets such that you have enough skin in the game so that it is worthwhile to go and become almost like an additional labs company for this network. and you can, pick and choose your own mission when it comes to this particular piece of technology and how you're going to orient this network and drive those goals forward. Is that the way that you're thinking about this as you guys are building more and more stake in this network? And I guess, what is it about Near and the AI landscape that gets you most excited, that you're most excited to push forward?
Yeah, I mean, just on the first point, very much aligned to where you're going, Rob. Like, I think if ultimately we didn't have this kind of wildly unclear regulatory environment over a 10-year period of time, we may have ended up with public companies that were first to market and played the role that foundations had played over time. And so I think as we zoom out over 2 to 3 years, you're going to see these vehicles in the public markets be, piece of the puzzle as it relates to driving an ecosystem forward and facilitating the business development efforts into the enterprise market, ultimately into government as well. And I don't know if we had clarity that we have today, or we will have over the next 6 to 9 months, that we would have seen the structures emerge in kind of the offshore foundation model that everyone became familiar with, from 2017 to 2024. So yeah, I mean, I think ultimately we're fortunate that we have a different point of view, top-down administration from a regulatory point of view. Seeing Paul Atkins this morning was inspiring to have that be kind of the top dog at the SEC, pushing forward an innovation agenda, describing exemptions around that type of work. But yeah, I mean, in reality, at the end of the day, like, our mandate is to advance Near's technology, and the confidential AI/private AI arc is something that's only going to gain steam moving forward. I've held the view that Near's technology is uniquely suited as a vertically integrated stack to solve for the key risks related to centralized AI. And that's why I've taken the bet and am pushing forward the build on the sovereign SVRN side.
Yeah. So basically, Rob, what you're saying is that there's like these labs and this foundation entities typically, and even that structure is kind of being torn apart a bit due to better regulatory clarity. But because, a company like Sovereign has such a large stake in the network, they now become like another kind of contributor of sorts. Yeah.
Exactly. And whereas before, like you said, the foundation was regulatory, it was limited to only focusing on the token, and they couldn't. Yeah. There was like all kinds of fugazi things that they would have to do. They were in charge of like the marketing budget, but the labs company had to be just in terms of like the development budget. Now it makes sense. Like, these things are becoming unified. They can work closer together, and still everyone can kind of divide and conquer and have the separation of labor, but they can have one unified mission. Whereas before it was this kind of facade of being these separate entities. Now everyone can kind of work together. Yeah. And I think that ultimately that's where we should have been for a long time. And now we're getting back to that place. One thing that Sal mentioned that I think is really important to kind of drive this private confidential compute, private AI point home. Like, why now? We've heard about privacy for a long time, but why now? ChatGPT is rolling out ads. I don't know if you guys saw this. Last week they made the announcement. It's going to be coming out probably in Q1 or Q2, whereas the information you're going to be fed is going to be sponsored, and they're going to have, we saw when these LLMs first came out, this bias that was implicit in these models and the way that they were trained. Now it's going to be explicit in the way that they're going to be putting these biases into these things because they're paid to influence these models. And I think it's just going to become pay to play. And we're just more and more going to the direction where we need private sovereign AI as a method of truth seeking in this world.
Yeah, I totally agree. And it's not even just on kind of like the explicit bias being expressed in the models. Like, I'm sure you saw last week, a third-party provider to OpenAI had a security event. OpenAI had to go outbound to its user base and kind of say, hey, heads up. It felt like a crypto moment where it's like, hey, heads up, your personal data just got leaked. You're going to be the target of a phishing campaign. Dave Schwed was just quoted in a Decrypt article talking about this yesterday. So it's not just around kind of model veracity or integrity. It's also around the data that you interact with models and the inference processes sitting inside of central servers that are subject to cyber events. The significance of those events will only increase over time as the moat and the value around that data increases. And Near provides a solution to kind of both pieces of the problem, like validate what the model does, verify it, but also give me guarantees around privacy and confidentiality when I'm interacting with models, so that I know no third-party database cyber event will result in, my relationship counseling or my mental health counseling advice and feedback from a model being leaked to a public discourse.
Yeah, that's important.
I mean, that's also a whole nother conversation, is how comfortable folks have gotten with sharing information with these LLMs, which is nuts. Sal, I think you're on the right side of history here, man. I think you got good timing too. Whether luck, skill, a combination of both, it sounds like you guys are in a really good spot. So props to you. Hope the announcement tomorrow goes quite well. And thanks for joining. Would love to have you on again. And just see this landscape just continually evolves. I'd love to catch up again in 3-6 months and see where you guys are at.
Yeah, it sounds good. Thanks, Andy. Thanks, Rob, for having me. Look forward to chatting soon.
Absolutely.
Best of luck, man.
Appreciate it, Sal. See you next time.
Thanks, buddy.
Speak soon.
Alrighty. And that takes us to the end of the guest segments, where this last segment is about what's going on. So Bitcoin's at 92.1. We're definitely putting in higher. We definitely putting in a higher low on the daily. We got 4 hours to close. If so, everyone's gonna be like confirmed bottom. Everyone's gonna say that we're going to new highs. You know what's funny, Rob, is that for the first time in a long time, a lot of people were saying, "Oh, it's over," but like they didn't want to sell. Like they were like, "Oh, the bear market's coming," but like you could feel that like everyone was still holding on. Dude, it actually feels like there's a lot of people sidelined right now. Like the perfect scenario is like this like dead cat that we're talking about, back up to the hundreds, and then everyone's just like, we're so back, buys back in on everything, and then they just nuke it again. Like that would just be max destruction and max pain. Because it does feel like people are sidelined. It feels like people got so scared. People were buying stocks, and I don't know, man.
Hold on, I gotta let me run with your hypothetical, because I'm of a similar mindset. Obviously, things look good like right here and now, but let's say we get there, right? I'm gonna go with your premise. We dead cat up to mid 90s. Maybe we hit some resistance around 100, right? 97 to 99 type, maybe even 100 or 101, right? Let's say we get there. Now, in your hypothetical that you just went through, you said people buy back in and then get shellacked. Do you think if we dead cat up to the high 90s, people buy back in because they're sidelined, or do people actually use this as an opportunity to trim the dead cat?
I don't know, man. I feel like the things get so crazy so fast. Like I mean, dude, Bitcoin's at 92.2, up 7% today. The daily candle is ridiculous. Looks like it's going to go push straight for 95. I mean, yeah, there's going to be a lot of pushback around that 98 to 100 range. I don't know, man. It would just be so insane if that was just a mid bull market pullback and we go to new highs from here. That would just be brutal. And so, I mean, well, let's see. What do we
You're looking at the daily. I'm looking at the monthly. We are not the same, my boy.
I'm at the weekly. Let's just say that 35% pullback from 126 to 80 is about the maximum pullback allowed for a bull market in Bitcoin history. Like you don't get much deeper of like that was about the worst possible pullback to keep a bull market. Now all the altcoins are completely different story.
I mean, if you look at the wick was a lot gnarlier, right? We went down about 25%. 35% if you include the wick. Exactly. But it's gotten,
I mean,
we bounced hard, right? And so we bounced from the low 80s back 10% higher to the mid to low 90s.
Also, the Fed rates went from like 30% chance of cut to 80%. So they're definitely cutting. People were saying that they weren't cutting, which was crazy. That was just like, guys, how have we lost our collective minds? They're definitely cutting. Also, I put out this tweet. People were saying that Tether was a fraud and insult.
Well, Arthur,
that was crazy talk.
I mean, you got to look at look at Malmstrom's portfolio. Their biggest bag is Athena.
MicroStrategy is a
love
Ponzi.
Arthur. I think
we were also getting the MicroStrategy FUD.
MicroStrategy.
What's new there?
Right.
L1s have no value. We had Hasib and Santiago freaking arguing about L1s. Santi's out there talking about L1s need to be. There's a value. There's all these people saying that there's all this value in L1s that's going to get constricted back a ton. Could happen. Who knows? I saw a guy calling for 35K, like earnestly, which I mean is possible, I suppose, but like it was just crazy, man.
I think the floor is actually going to be a lot higher than people think. Maybe it's already in, but the people that we had on the show today, there is no existential crisis. If you look at the previous cycles, like
I don't know, man. I think
we know
Outlier Ventures guy Jamie was probably a little bit stressed out about the performance of a lot of their locked tokens, as many of us are. You know, it's pretty bad.
I think we have to separate the altcoin market from Bitcoin, really, and we have to look at like, you know, let's be real, right? For all the people who are watching, what are our biggest bags right now? It's Bitcoin, ETH, and Hype.
Yeah,
and then there's you know, the portfolio of venture that, you know, we've angeled into over the last, we haven't done much over the last 6 months, but you know, going back like 6 to 18 months, we did, you know, maybe even 24 months at this point.
Yeah,
it's been quite a bit. Haven't had any significant liquidity events, but you know, we've seen tokens launch, cliffs, etc. Right? So there's a venture market of newly launched coins that have come out over the last year or two, and then you've got Bitcoin, ETH, Hype, which I think are you know, the primarily focused for the liquid bags.
Yeah.
Putting aside, to me, the venture bag is like I like fully vested over, you know, 4 or 5 years. It's like, look, it's something's going to hit and it's going to return the fund, you know, in 5 years. And then there's going to be some liquidity events that happen around that. But if we're focusing on the liquid bags, I mean, Bitcoin went down 35% from its high. It just happened quicker than we would have expected.
That's so fast.
And I think some of that is fallout and washout from 1010.
Look, the thing though is this thing can get to 107, 110 even, and still be in a bearish structure, and that people can't fathom that, which is crazy.
You and I have a problem of time horizon disparity.
Look, I don't think it matters. I agree. It doesn't really matter. Like long term, it doesn't really matter. I think the Santa rally is probably on. Like we're on. Like it's on. I mean, like sentiment's bad. I think enough people are sidelined. This daily is enough to secure a higher low on Bitcoin, which is enough to give us at least 1 to 2 weeks of move. I think, you know, from the people that I like to listen to, a multi-week, you know, a counter trend rally, if you consider the short-term trend or the midterm trend to be bearish, considering that we put in the high in early October, the high was in. If you consider that to be a deviation, then the high has been put in August. So it means that it's been, you know, 4 months ish, you could argue 3 to 4 months of bearish trend on Bitcoin. So you get a you know, multi-week to month counter trend rally, and then you like there's basically coming a point where there's a absolute shootout between the bulls and the bears. It's going to happen around a low 100Ks. It's going to happen sometime in the next 6 to 8 weeks. And that is going to determine a lot of the trend for the first half of 2026. Because if bears win that and turn that thing over, 105, back under 100, back under 90, dude, that thing's going down hard. But if bulls win it and can sustain above 100 for several weeks to months, then this thing could just level out again and keep going. And honestly, I think that scenario would actually freaking throw people for a whirl more than a bear. A bear would hurt people more and would cause more stress and piss people off and cause despair. But man, do I believe that actually this thing leveling out for a while and then sending would actually throw people for more confusion. Like, because right now, if we go into a bear, it's going to be like 4-year cycle was right. How do we all not picture that?
You're saying this time is different.
I'm saying if it is different, people will be like, "What the hell?" Yeah. So
I think that's pretty accurate. I do think we're going to face some resistance. I think we're going to face some resistance between 98 and 102. I mean, it's just psychological at this point. But if you do take a look at the monthly, we're putting it, and this candle holds, and we don't go back below 90 for like any. Like we do get a little bit more of an uptrend for the rest of this week and maybe next week. It looks like a pretty solid higher low, and
On the monthly, yeah, it
on
does.
the
It
monthly.
really does. It is about as close as it could get. But I think, yeah, I mean, we're gonna get a face-off. It's coming. The face-off is coming in the next 6 to 8 weeks, if not sooner, where the first half of the year of 2026 is gonna be decided.
I think we're gonna chop pretty hard around 100. I think we're gonna get it. We're gonna get up there. But I think you're right. I think the lows are in for now. I think we're gonna get a decent amount of chop. And guess, I mean, what we've seen what happens when Bitcoin is in an uptrend and it just chops around resistance. Altcoins tend to do well.
Yeah, I mean, that could happen because they've been so beaten up. Look, I'm just gonna continue my spot and trim plan. Hold my long-term bags, hold my Bitcoin, try to hold as much hype as possible. And basically try not to sell any of the venture stuff. I mean, I was in the EtherFi investor chat with DCF God. He was like, if anybody wants to sell EtherFi, like, I'm happy to take it off your hands, blah, blah, blah. And we're sitting there. We talked to Mike. They're doing what he said, like 60 million in ARR right now or something.
Dude, they're
like
doing
that.
buybacks.
I was like, dude, I'll see. What did I say? I was like, haven't sold a single EtherFi yet. And you think we will now? I'll see you in 2030. Dude, I honestly think that. So Hasib's like age of exponentials thing, it actually really applies to like our venture stuff. It's like, dude, we would be remiss to sell things that we invested in with a long time horizon on year 2 of the unlock because we can. Like, we don't need the money, obviously, and we don't need to make a move. Dude, like a lot of these are like 1,000x or 0. Like EtherFi is either like the next freaking
American
Visa
Express.
or like
EtherFi
we
is the
lose
next
like 20
American
grand.
Express.
Like, okay, you know what? Like, let's shoot for the 1,000x here, huh?
That's really where we're headed.
But that's the venture. That's the venture side.
That's a whole
Everything
different
else,
conversation.
like, I'm not
Liquid
taking
is where we're at.
Right.
I think we have the premise. I think we get to 100 or very close to it. We get to high 90s, we get to low 100s on this Santa rally bounce. It will be determined whether this is a dead cat and whether people sell the dead cat or people buy the dead cat. We get up to low hundreds and then we get shellacked. We're gonna see. I think
Dude,
we're
let's
gonna
even
chop.
hope we get there, bro. My God. I mean, this daily on Bitcoin is going to be significant. I'm not worried, man. Long-term trend has not changed. Goal is to raise cash in times when people don't want to, so you can stack more sats and coins when people are pessimistic, and you can be optimistic because you have cash. You know, a couple hundred grand today is worth a lot more than, or is worth a lot less than a couple hundred grand if Bitcoin's at 60K. And that's just where you want to be. So look, guys, I think Santa Rally is on. I think it's hard to say that we're not going to get a Santa Rally. I think what happens after that is up for grabs still. So,
we know the structure and the landscape going into 2026. You've been saying 2026. You've been listening to Benjamin Cohen. You've been saying 2026 is bearish.
Dude, I think Bitcoin does hit that 60K mark ish in 2026. It's hard to see it not doing it. Even if we rip from here, I think it's going to happen, man. Just got to be ready for it.
I don't think Bitcoin ever hits 60K again, ever. Ever.
Wow. I mean, dude, there is a reality, right? Where, I mean, you got the QT ending, QT starting, rates being cut, Clarity Act, Trump getting rid of Powell, enacting his own monetary policy, wanting to pump his own bags. Like, there's a whole world of reason why it will never go under 60 again. But they were saying that was never going under 100 again.
The president of no, we knew he was going
in 3
under
weeks
100
went to
again.
80K.
The president of the United States, his son runs a Bitcoin mining company. You think he's not going to, like, what do you think this is? Like, there's a time to be contrarian, and then there's a time to just look at what is happening. And if we look at what's happening, the person in charge of the money printer, he has shown a pattern of behavior to enrich his family. You can tail him and his family, or you can be contrarian.
No, dude, I think it's more like it's hard to see that when I look at my alt bags and I'm like, oh, what happened to you, Pengu?
Different scenario.
Pengu,
It's a
what
different
happened?
thing. Eric Trump does not run a Pengu staking DAT. That's not what he does. You got to look at the facts. Okay. It's not,
Oh my God.
we're not going to extrapolate and say, Bitcoin goes up, everything else goes up. I do think if Bitcoin gets to 100, it's macro bull, and we chop around that, maybe there's some alt relief that happens. But I think structurally, if you look at where the incentives are for the person in charge to benefit his own self-interest. We know he's going to do that. The guy's a narcissist.
That does
We
not
know he's
mean
gonna
that we
put
can't go
himself and his
under.
family. And
That doesn't
where
mean
are
that we
the
can't go
incentives
under
for him and his
60K
family?
though, or 70K though. He doesn't have like a magic wand that's like, oh, I'm gonna stop the price from dropping. It's like,
Yeah, his magic wand is picking the Fed governor. And the Fed governor says, whoosh, money printer.
But that's in May, right?
In May, yeah.
Yeah. So, all right, guys, great stream. See you guys tomorrow. We got a bunch of work to do, so catch you guys on the flip.
America's the crypto capital of the world. 2026 is the 250th anniversary of America.